Good morning, everybody. It is Thursday, July 11th, 8:20 a.m. And in 10 minutes, we've got these CPI numbers. I'm not going to lie. I'm a little nervous because these numbers are very important and we need to see some good numbers to keep the ball rolling. But I think based on how the market acted yesterday in terms of what they were looking for and ultimately what the market did with the S&P getting to $561, we're likely going to see some numbers that aren't as bad as some of the bears think that we're going to get. Right now in the pre-markets, this is what we got going on. Palantir, $28.27. We do have some red action in the pre-market. Things are red. The only thing that's not really that red is Bitcoin. Bitcoin trying to get back to 59,000 right now at 58.5. S&P is at 560. Now, look, the red we're seeing in the pre-market is so like normal to me. I mean, the stock market went up 1% entirely yesterday. So yeah, we're going to see some red. Wouldn't expect the S&P to just bounce up to 570 in the pre-market, especially before the numbers. People are probably getting very nervous of what the numbers are going to be. But if we hold 560 on a decent report and on a really good report, if we go higher, then this can get very exciting for the broader market. Everything else pretty much, though, is down. AMD is down a little bit. AMD had a big run yesterday. Rivian is actually up. That's one of the stocks that's up. Costco is up. They announced some price changes yesterday. We'll talk about that later. Intel is down. They had a good run. Apple is down. They broke out yesterday at up 2%. So a lot of stocks that had a really good run yesterday are down. Tesla was down for the end of the day, so it's actually up a little bit in the pre-market. But this CPI number is going to determine if these stocks that were up yesterday and are experiencing a little bit of downside in the pre-markets continue to go down, or if things change and they surge even higher given rate cuts get priced in. Microstrategy has announced a 10-for-1 stock split. MicroStrategy is up 4.40%. I don't think the stock split is why they're up. I actually think why MicroStrategy is up is because Bitcoin is getting closer to 59,000, but that stock split definitely helps. We were talking about this for a while, that it was time for Saylor to do a stock split. The stock is $1,300. It makes a lot of sense for them to split it. I'm reading right now off of the press release here. So they will be doing this August 7th. So in about a month, we're going to see this stock split happen. And I think it makes a lot of sense. The options market will probably get a little higher for MicroStrategy, more liquidity, as people will be able to trade a $130 stock or $150 stock versus a $1,500 stock. And yeah, August 7th. That's the information that we have for here. 10-for-1. So I think this is really bullish. I like it. Also, Bitcoin is kind of trending by most analysts to start breaking out into that August, September, October timeframe. So we'll see if that coincides with the stock split. Another thing that's important in the context of Bitcoin is that Trump is officially speaking at the Bitcoin conference. And so that is going to be another catalyst in the next 3 months or 3 weeks going into the Q4 or Q3 of the year, because we're probably going to see a little bit of momentum on him and what he says for his candidacy in the context of Bitcoin on July 25th. Now, do I think Trump's buying votes? 100%. I don't think Trump really cares about Bitcoin. But the point is, the Bitcoin people that care about Bitcoin are going to vote for Trump because they want to care about their best interests. And so Trump, MicroStrategy, Bitcoin having more liquidity with a potential rate cut, given we have CPI in 6 months, all of that is going to determine at the end of the day how the broader market feels about inflation. And so now it's just a question to see what it ends up being. Good morning. Happy Thursday morning to you guys. Thank you for being here. CPI data in 6 minutes. That's correct. CPI data in 6 minutes. What do you guys think? Put it in the chat. What are you guys thinking? The market is expecting 3.1. The market is expecting 3.1. I think we come in with 3.1, and I think nothing goes bad. I think if we get 3.1, nothing goes bad, and we're good to go. Maybe see a little bit of weakness, but that's just because the market expanded yesterday, and so people will take their profits. But I think if we come in at 3.2, we'll see some weakness, given yesterday the market priced in dramatically a 3.1. I mean, the S&P doesn't go up 1% if they don't think we're going to get CPI coming in cold. If we get 2.9, as Russ says in the chat, oh boy, if we get 2.9. I don't even know what I'm going to say, dude. If I see a two-hand, there's just no way. We don't see a 2.9. There's just, I think 3.0 is the maximum minimum amount we would see in the context of CPI. And it would be incredible if we get 3.0. 3.1 is what we need. But every bank, as you can see right here, is basically saying about 3.1. If we get 2.9, dude, it's going to be crazy. It's going to be crazy. It's going to be absolutely crazy. Laser, good morning from Long Beach, California. Yeah, put where you're watching in the chat. Where this is the early version of the show. Usually the show starts at 8:45. So those that are here early today, thank you for being here. Put where you're watching from the chat and where around the world you are consuming this content from. Palantir, $28, pretty exciting. It'll be interesting to see if we can hold $28 today, especially given what happens with CPI. I did a pretty long video yesterday. I'm getting 2 questions right now by different people. Number one is, hey, I have like a $14 average or a $8 average, whatever, and I think this is the top. Palantir is moving too quick. Should I sell and buy in later? That's one question I'm getting. The second question I'm getting is, I missed the run. I think Palantir is going to like $70. Should I buy in at 28? I spent 30 minutes yesterday talking about my answer to both of those questions. So if you are a little concerned about price movement, just watch that video and hopefully it gives a little bit of clarity of at least how I'm thinking about the stock action. But 28, dude, $28. It's fun. $28. We got Raul from Fort Lauderdale. We got Ryan from Canada, Arnold from Germany, Nick from Nashville, Tennessee, Toby from Berlin. I love it. C. Harris from Detroit, Frank from Boston. I tried to do a Boston accent on the word Boston. I'm so bad at accents, but I love the Boston accent, dude. I love it so much. It's like it's competitive with the New York accent, but the Boston accent is like more rough. We got Jed from Virginia. We got Austin from Texas. Kevin Smith from Houston. We got Florida, Australia. I got to go to Australia, man. I love the Australian accent more than I love the New York and the Boston accent. So I got to go to Australia. We got Washington, the UK, Germany, Studio City, California, Wisconsin. I love it. We got CPI in 3 minutes. Here's the website. I'll put it in the chat for those who want to get on it as well. We're going to be refreshing this in 3 minutes, and we're going to see what the hell happens, dude. This is one of those days. You know, the interesting thing about days like this is that none of our friends, none of our family members, like my mom, I think she's on the phone with one of her friends in the other room. She could not give 2 shits about the CPI. Even though she started to get invested in the stock market, she kind of cares about it. Like, she could not give 2 shits, even though it is one of the most important metrics of the next, like the trajectory of the next 6 months depends on this one metric. And she doesn't give a shit, but we care. Like, we deeply care. And so it's just cool because we're a small group of people that like really give a shit about this. We got Chamu from Florida. What's up? We got Scotland in the house, Slovakia, Glasgow. That's in the UK. I love it. Bitcoin is up, yes. And if we get a good CPI, Bitcoin maybe prints even higher, given the numbers that we get. We got Bay Ray from Alaska, the UK, Arkansas. Someone said your mom's bedroom. That's mean. That's not a nice thing to say. Nebraska. Oh boy. Ireland. I'm not going to make the Dublin joke. I'm not going to do it. I'm not going to make the Dublin joke. I'm not going to do it. But hopefully if CPI comes down, you know, I get to go to Ireland and my money starts doubling when I go to Ireland if CPI ends up going down. Let's see what we get. Unfortunately, I can't have the stock market up with CPI. StreamYard has to fix that, dude. I need to be able to show 2 screens at once, and they don't allow that. But StreamYard is the best streaming site out of all of them. So like they really need to allow you to stream 2 things at once, but they don't, unfortunately. But if they did, I would definitely show where the stock is right here. But once we get the number, which in 30 seconds we'll get it, we're going to literally just go to the stock market and then we'll look at the actual reading. We're looking for shelter and energy to be down. And then everything else, auto insurance is probably still going to be up. But if shelter and energy, even if shelter's up, if energy can come down even more, then that's going to be important. Oh boy. All right. 30 seconds. 30 seconds. Oh my God. Oh my God. Oh my God. I can't breathe. I can't breathe. I can't breathe. Oh boy. Oh boy. Oh boy. Oh boy. Oh my goodness. There's the website. I just put it in the chat. Here we go. All right. It's 8:30. I'm refreshing. It's not there yet. You're going to see, instead of that saying 612, it'll say 7-5 or sorry, 7-11. Oh, today's 7-11. Wow. Today's 7-11. Today is July 11th. Okay, it's not out yet. Oh my God. I can't breathe. I can't breathe, dude. I really can't fucking breathe. I can't breathe right now. Oh boy. Market's up. Okay, I'm not looking at the market. I'm just okay. What do we get? What do we get? 3.0. 3.0. Let's fucking go. 3.0. It's better than what is expected. Let's fucking go. Let's go. 3.0. The market wanted 3.1. 3.0. Okay, let's go. Let's go to the market. Oh my God. This is what we needed. Microstrategy is up 2%. S&P 562, new all-time high. Tesla 266. Nvidia 136. Palantir 2870. Robinhood $22.55. AMD 185. Rivian 1679. Costco 2% up. Bitcoin 59,000. That was a jump of basically 500 points in the matter of in the matter of like minutes. TSM up 1%. Intel is flat. Apple's now green. It was red. Amazon 199. S&P 500 562.49. Oh my God. Oh my God. Is Bitcoin still running? No, okay, Bitcoin just fell right after. but still, at least we got up to 59 and then they came. Wow, we got to 59,500 and then we dropped 500 points. But that was a big jump. At least we're still up from like 58.4. Holy crap. Palantir 2861, Robinhood 2255, AMD Meta 537. Well, this is what we needed, folks. Regardless of what happens to stocks today, this is what we needed because it's not about today. It's about September and that cut. And CPI came in lower than expected. Tesla right here, 266. Maybe Tesla makes a gap for 270. Oh, where's SoFi? Where's SoFi? Where's SoFi? There you go, SoFi, 677. Maybe SoFi tries to gap up to $7 today. We'll see how the market treats it. But this is the number we needed. This is the number you needed. MicroStrategy up 6.54%. They're going to be doing a 10-for-1 split. They just mentioned that today in the morning. S&P 562. Palantir right here, 2869 on the day. S&P is 563. Boom. S&P is 563. Oh my God. Oh my God. All right, guys, I got to do the tweet. Give me 1 second. Let's make the tweet together. Oh my goodness, bro. This is what we fucking needed. We needed this number. We needed this number so bad. We really needed this number. If it was 3.1, it would have been okay. 3.0 is incredible. That means Tom Lee's right. Inflation's falling like a fucking rock. Okay. What do we say? Breaking. CPI comes in at 3.0%. below expectations of 3.1%. Oh my goodness. That's it. That's all we're going to do. Oh my goodness. If you guys know me, that you know the oh my goodness is a big one. All right, let's get into this report. Let's get into this freaking report, bro. Let's fucking go, man. This is what we needed. The consumer price index increased 3% before seasonal adjustment. The index for gas fell 3.8% in June. Okay, so gas came down after declining 3.6% in May, 2 consecutive months, more than offsetting the increase in shelter. So the gasoline decline, even though shelter went up, was able to reconcile and kind of wash out the shelter increase, which does mean the shelter did go up. Energy fell 2%. Index for food increased 0.2%. Food away from home index increased 4.4% over the month as well. Okay. What else do we have right here? Index for all items less food and energy rose 0.1% after rising 0.2% the preceding month. Indices, which increased in June, included shelter, motor vehicle insurance, we knew that, household furnishings, medical care, and personal care. Airline, used cars, and communication decreased. Airlines probably decreased because there's so many people buying these tickets that it's leading to airlines to actually lower their prices given they have a lot more demand. All items rose 3% over the 12 months, a smaller increase than the 3.3%. The all items less food and energy increased 3.3% as well. Okay, let's go to shelter. Let's see what happened with shelter. So the shelter index increased 0.2% in June. That's a slight increase. It's not as much as I think some people thought. The index for rent rose 0.3%, and see, a lot of people are saying rent is going down, so this is lagging, which means CPI will really decline in the next couple months if that's the case. The lodging away from home index decreased 2% in June after falling 0.1% in May. Oh, that's good. Lodging from home decreased 2%. That's great. Medical care rose 0.2%. Motor vehicle index rose 0.9%, following a 0.1% decrease in May. The index for household furnishings and operations increased 0.5%. Airlines fell 5% in June. Wow. 5%, dude. That means it's just getting very competitive for the airlines. And so they have to keep dropping their rates because, like, if people are going to Delta and there's a lot of people traveling to, the Bahamas, then United's going to be like, hey, go to the Bahamas with United. We're going to charge cheaper than Delta. And then Southwest is going to be like, actually, you could go with Southwest to the Bahamas. And so that competition is really great for the airline industry. And we're seeing prices go down, following a 3.6 decrease in May. So in May, airlines went down 3.6%. In June, it went down 5%. And I think in July, it's going to go down even more. Over the month, the used cars and trucks index fell 1.5%. That's great to see used cars come down. Used cars is a massive part of the overall CPI. It's just under energy and shelter, so that's important. And the communication index decreased 0.2%, and the new vehicles index declined 0.2%. So new vehicles and used vehicles are declining in terms of their overall price. Okay, not bad, dude. Not bad. So shelter increased 5.2% over the last year. Index for all items, less food and energy, rose 3.3%, but energy and natural gas did go down month over month. If you're just joining, we got a 3% increase versus 3.1 expected. Last time we had the street wanted 3.2. We brought in 3, or the street thought 3.3. We brought in 3.2. This time, the street wanted 3.1. We brought in 3.0. If we see a two handle in August, 2.9, 2.8, we're doing a cut in September. And I think the market knows that. S&P 562, SoFi 672, Tesla 266, Nvidia 137. I could see the market cooling off a little bit because we're getting a lot of momentum right now. But even if we cool off and, even if some of these stocks go red, it really doesn't matter. What matters is that CPI coming in lower than expected, because that means September we're going to get that cut. Palantir right here, wow, 28.65. Robinhood 22.59. Rivian's up another 2%. You can see Apple already going red. Yeah. So again, some of these stocks have run so much. Apple's up like 5% this week. So a good CPI, unless CPI was like 2.0% or something, Apple, people are going to take some profits, right? It's just getting up there. But in general, this is what we needed. GameStop is up 2%. QQQ is up 0.3. Snowflake is up 1.31%. Where's Rocket Lab? Rocket Lab, wow, is up 1%. Or no, it's flat. Yesterday it was up 1%, but 513 on Rocket Lab. S&P right here at 562.93. What do you guys think? Oh my God, this is amazing. This was so important. Good morning. Thank you everybody for being here. This was so important. Oh, where's IWM? Where's the small caps? Small caps are up 2%. That's a big deal, bro. Small caps small caps, they don't move. Especially as big tech is moving. So the fact that small caps are up 2%, that's incredible. That is actually incredible. Not bad. Not bad at all. All right. This is exciting, folks. Let's get some coverage from CNBC. Let's see what they're saying on this. And we'll keep going from there. This is great. All right. Let's see this and we'll keep going.
Senior fellow at the Brookings Institution, Joe Lavorgna, chief economist at SMBC. Nico Securities America, September. I'm counting on it, Wendy. September.
Do it, and then we have 4 bad months of inflation numbers. Now we've got 2 good months. So to me, July is too soon, and September is too soon, unless the labor market really falls apart. Just because I don't think it's, well, one, the equity market is rallying, and it's made financial conditions extraordinarily easy. So you're easing and arguably just further adding to the bullishness and euphoria in stocks. And to Wendy's point, right now the economy, I think I'm negative on the economy, but she makes a very good point. It's holding up. Labor market looks better balanced. Why are you rushing to cut rates unless it's absolutely compelling? And in that regard, a certain someone will likely be yelling about rate cuts and everything else. So I would. But you're negative on the economy. Don't you think they should cut then? But I'm negative on the economy because the things I look at tell me we're going to soften. The Fed doesn't put emphasis on those variables, and I think the inflation's a lagging indicator. But my point is that I do think it's got to be really compelling so the Fed could be above reproach and not be accused of of helping, one side or the other.
One thing you've heard officials say, Wendy, is that they want to see, I forget exactly how they said this, basically a series of reports that are basically 0.1s, 0.2s. Now they might have meant on the core, but when you start to see a negative, we are getting into the territory where even Fed officials are going to take notice. How many more months like this are they going to need to see? 1 or 2?
They're going to wait until September. They're not doing it in July, but they see more negative data. I think we're getting that cut. And today is a good day of getting that data.
I think we're there. I mean, I know that they're paying more attention to core than they are to headline. So headline fell, but core, as I said, last 3 months, 2.2%. That is actually a little below target for core CPI. You'd expect core CPI to be at 2.4. So in fact,
for a 2% PCE
for
target?
a 2% PCE. So that in fact means that we're a little softer on core inflation than the Fed needs to see to be at target.
If they cut now, some have said they're going to reignite services inflation, and others say there's no way. That inflation's all about the housing market. What do you think?
So I see the consumer finally starting to pull back. So where I've been most concerned is what's been happening to goods spending. And real goods spending is down over the last 6 months, which doesn't surprise me. Real goods spending was incredibly strong in the years following the pandemic, and I've been waiting for it to fall. And it has fallen, but not, it seems, because consumers are feeling incredibly constrained. Real incomes are actually up. So it's the best of all possible worlds. We have consumers finally retrenching. We have payroll employment at 177,000, which is a great number, but actually pretty consistent with what I think is a sustainable labor market given immigration.
Real weekly wages are still not up.
And so, I mean, the argument she's making right there is pretty important. She feels the consumer is getting weaker. Let's hear from Tom Lee in a sec. But she also feels that the consumer has the wage inflation to keep up with what they're spending. And again, if 3 million people are traveling on a random Sunday in the summer, then there's probably a lot more money out there in the ecosystem to be able to spend from a disposable perspective. Here's Tom Lee yesterday on what he thought would happen, and he ended up being right again.
Critical consumer inflation data tomorrow. I think that last point was important from DataTrek, Tom, which is they kind of made the implication that, from the low to the high of these runs that we've had since 1990, 75% was about what we got before it topped out. I think you would disagree or agree this time is different.
Well, I don't know if peaks and markets are measured by the percentage gains off the lows. We've studied that extensively. I mean, even going back to 1929, no drawdown or bull market bottom has ever been measured by how much it's risen. It's usually by how much of a prior move is retraced. I don't want to be too complicated, but the reason I might disagree that we're topping is there's no signs of euphoria. And in the client meetings I've done, and I've done several this week, and the Zooms that I do, and I've done countless Zooms, we find institutional investors are still pretty skeptical of this market move because they view it as concentrated or premature because the Fed is still not cutting, or they think inflation's still a problem. So I think many people cite reasons to be sidelined and actually skeptical. So to me, that's not what you usually see at the top.
Now, I thought that was a really important point. Tom goes across the world talking to his institutional clients, high net worth clients, and essentially his clients are saying, hey, dude, we don't believe that this rally makes any sense. We don't believe Tesla deserves that $300 billion of market cap in a couple of weeks. We definitely don't feel that the risk-free rate of return, like a money market fund, is less attractive than putting your money into something like IWM with all these not so amazing companies in an index. So like, why should we think this rally is reasonable? And Tom has been having this debate for the past 8 months, really the past 2 years with these clients. He's talked about this on multiple podcasts, that he goes into these Zoom meetings with people that have a ton of money and he's like, hey, put it into the stock market. And they're just like, no, we don't believe you. And he's like, but you guys pay me to tell you what to do. And I'm telling you, I think you should put it into the stock market. And they're like, no. And the ones that have ignored his advice, it's so funny. He was telling the story when he goes to meet with them, like the next week after the market like explodes, he's like, hi. He's like, they're like, hello. He's like, do you want to put your money into the market now? They're like, no, we definitely don't believe it. Now it's even higher. And he's like, I don't know what to tell you, because at the end of the day, this market is in a bull market. And so you can't really time the top of this bull market there. And I mean, if you think it's a 4 or 5 year bull market, then this is not the top. There's going to be a lot of strong earnings growth to support what we're going to see, along with the tailwind of the dovish Fed basically cutting rates. And so Tom Lee's argument has always been, if we're going to have earnings momentum, SoFi right here up 3%, Tesla at 266, and we have a Fed that is going to lower rates, then we are going to get a broader market. Now, the reason that I thought that soundbite was so important is because if all of his clients feel like this is a top, then contrarian to what a lot of people think, this might not be a top. This is a top when people think, all right, we just got to keep putting in more money because it's going to go higher and higher and higher and it's never going to stop. But he's feeling the opposite. And we've heard this argument with NVIDIA. The opposite is happening with NVIDIA. Everyone thinks NVIDIA is ready to crash, go back to 85, 90 bucks, which, leads to that not really happening because more people decide to pile in. So the contrarian opinion is to be bullish on this market. And I think that's been the contrarian opinion basically for the past 2 years. Quite frankly, it has been consensus. If you look at the Mike Wilsons of the world and the sort of Liz Youngs of the world that have oldest distribution on national television, telling people to sell their stocks, bear market, like that was the consensus. And you had people like Tom Lee actually looking at the data, thinking there was a different narrative. And then you had the tailwind of AI, which obviously was very, very important. Palantir right here, 2872. But regardless, all of this stuff came together to get to a bull market. And the funny thing here is that if this truly is a bull market over the next couple of years, we are going to see more momentum from the mega caps. And everyone is annoyed that, especially fund managers, that mega caps keep outperforming and everything's so concentrated. But at the end of the day, if quality is quality, they're going to keep performing. Here, if you guys want to feel good about yourself, especially if you've had a decent year, here's how you can feel good about yourself. This is a report of the top hedge funds in the United States and their first half return. Light Street's up 54%, Whale Rock's up 31%, D1's up 20%. Citadel and Down are only, or I mean, I don't want to say only, but they're up 13% or below. If you are up more than 13.7%, you are doing better than Citadel, which is not too bad, dude. You're doing better than Citadel, which is not too bad. Obviously, a hedge fund is different. I know they're managing tens of billions of dollars and they have to literally hedge. And so if you hedge in certain sectors and those sectors go up, you're going to lose on your hedge. But the point is, with other sectors, you're going to go up. So I know it's a whole different concept of managing money, but still, I mean, some of these hedge funds, literally, they could have just like went long and not necessarily hedged. I know that's contrarian to being a hedge fund, but you get my point, because this is a bull market and they could have done very well. Now, Light Street, the reason they've done very well, NVIDIA is one of the top holdings. I believe it's 17% of the fund. And so that's why they've had some momentum. So if you kind of just bet on some equities that are, really doing well, like NVIDIA, or that we're going to have a good year, then you've outperformed from everyone else. So, I mean, the point is, I think Tom Lee's argument is that if you looked at the data, you saw inflation was coming down. The perception becomes reality. The perception is that rate cuts happen. That's becoming real as inflation continues to come down. We had 9.9% top headline inflation in June of 2022. I remember I didn't even really understand in June of 2022 what like inflation and CPI and PPI was, but I just remember it was bad. Like everyone was freaking out and the stock market acted accordingly. I mean, stocks suffered. Palantir was at $7 at the time. It could not get any momentum. Now Palantir's at 28.76, not only because the company has changed, not only because of the tailwind of AI that has led to the resurgence of its value to the broader enterprise, but also because inflation went down from 9.9 to 3.3, and 3.0, and if we get down to the low twos at the end of the year, then we're probably going to see even more momentum. So there you go. If you're just joining, 3.0% headline inflation came in below 3.1%, which is very exciting. June says, admit you have the exact opposite opinion on the market that Chris had on Cash Flow Chronicles last night. So me and Chris are disagreeing about a certain subject. We agree that the broader market will get rate cuts and all that stuff is good, and we're both bullish. But remember I told you guys I was on a phone call on like 2 weeks ago with two people. We didn't end up doing the podcast. We have to do the podcast. But the phone call was Chris and Steve. And the way the phone call started is Chris called me, I think this was 2 weeks ago. And he was like, dude, I feel like AI is running too quick. And then I'm walking outside and I'm like, no, I think you're wrong. And this, and this. And he's like, no, I think this is too much too quick. Not in the stock market, but like in the concept of AI, just like AI is a hype cycle, essentially. So then we get off the phone after an hour and I call Steve. I'm like, Steve, Chris thinks yada, yada, yada. What do you think? And he's like, Chris is fucking wrong. And I was like, all right, let's do a group call. And so we do a group call. which should have been a podcast. It was a really good call. And it's basically Steve and Chris going at it, trying to come up with justifications for why AI is not hype. That was essentially the theme of the conversation. And I get Chris's point that there is some hype with AI. I don't agree that it is overall hype. And one of the reasons I don't agree, I'm actually going to play a clip that kind of is also, it gives you my perspective on this. Every startup in the world that is building something real with AI, they're going to need GPUs. And because they're going to need GPUs, those GPUs are going to create more demand for NVIDIA on the hardware infrastructure side. Chris's bear case is like, wait a second, none of these startups, or not even just startups, but AI companies, he would even classify Palantir here, are creating anything of value with AI. So the use case of all these GPUs and LLMs being trained, like that's just not doing anything for the broader economy. There is no sort of substantive use cases that are operationalized to drive increased revenue, increased margins, etc. And that's where I think he has an argument for some startups, but I think the ones that are winning because they're providing those use cases. And that goes into the discussion about Palantir. The reason I think Palantir is gaining momentum, and I talked about this yesterday in the 30-minute episode, I went really in depth on my thoughts here. I really think the street is thinking that the software application of AI they need exposure to because maybe they missed the hardware application or they're just overweight hardware. Hardware is semiconductors, chips, etc. And so then it begs the question, what company in the public market is using AI and forcing it into people's enterprises, whether it's BP, Airbus, whatever, and it's fundamentally transforming that enterprise to the point where that enterprise wants to pay $100 million a year for that software? Is there a company doing that? And as of now, that use case is just being developed, just being formed, but you want to be early to the party. Just like with NVIDIA, you want it to be early to the GPU revolution. And I think that's my theory for, like, that's another one of the theories I have for why institutional FOMO potentially is happening with Palantir. And even if the stock drops 20, 30% from here, institutions are probably just going to load up and they're going to say, all right, this is going to be the way I get AI software exposure. And if unlocking AI in the enterprise is worth trillions, then obviously Palantir hopefully is going to be a beneficiary of that. Let's play this clip right here. Venture capital firms are renting out thousands of GPs to tech startups. This is another reason I think Chris is wrong. If the VC funds are buying these many GPUs, it doesn't mean every startup they're funding is going to work out, but it does mean they believe you need to have this AI infrastructure in order for startups in the AI space to even have a chance to succeed.
Demand, one of Silicon Valley's most prolific VCs, are among the firms stockpiling them. Why? Well, Deirdre Bosa will explain in today's Tech Check. Dee?
GPUs are the new currency in the age of AI, so Andreessen Horowitz is amassing tens of thousands of them to gain an edge in deal making. This according to the information. The idea here is that Andreessen can offer access to NVIDIA chips in exchange for equity in the most promising Gen AI startups. That is because GPU access can be harder to secure than cash, and to build an AI business, founders need compute power, access to the most advanced infrastructure, most critically in that building. So what Andreessen is doing, it's not new, but it is likely the most aggressive GPU for equity strategy from a VC firm, and it's likely costing them hundreds of millions of dollars. It is also essentially how the mega caps have been building stakes in Gen AI companies like OpenAI and Anthropic, rather than investing all cash. Amazon, Microsoft, Google, they've been investing by offering access to their cloud infrastructure through credits. They get double benefit. Equity in a promising AI startup that could go up, and they also get revenue back in the door through their cloud businesses, through those credits. For VC funds like Andreessen, though, there's more risk involved. They're spending hundreds of millions of dollars, likely of LP money, to rent or buy GPUs, and then offering it to startups at the very early stages, many of them with still unproven business models. In the past, chip prices have come down very quickly. It's a very cyclical industry, leading to gluts that happen quickly. If that happens because, say, AMD or the mega caps themselves develop NVIDIA GPU alternatives, VCs could be stuck with those stockpiles of GPUs that are also less valuable.
But in a way, Dee, this.
So what's really interesting about that, again, is like, why is Andreessen Horowitz buying couple $100 million of GPUs? They know not every startup that they rent the GPUs to are going to work out, right? Most startups fail, but the one AI startup that starts taking off, they're going to need a shitload of compute. And as a VC, if you can offer that, that's a competitive advantage. So the point here is that I think the age of AI startups is starting to form. We looked at this company a couple of days ago, Hebia.ai. They just raised $130 million from Andreessen Horowitz. And I mean, if you go to the website, it literally just looks like it's AIP. I mean, it's just about taking your data and delivering value and using AI agents and deploying enterprise LLMs. If the VCs feel, well, the startups that can do this are going to become very, very big companies one day, and Palantir already is a quote unquote startup that is doing it in the public markets profitably, and that has a go-to-market, i.e. boot camps, that's better than any other go-to-market I've ever seen, especially in enterprise software, then maybe Palantir ends up winning. Let's transition a little bit to Palantir. I want to talk about them, and then we're going to get into Apple and some of the upgrades we got. So I was reading a bunch of articles yesterday on Palantir, and the reason I was reading these articles is because obviously the stock has surged, and I also am curious what the broader ecosystem of people are saying. I'm getting a ton of feedback from people thinking that it's too quick, too fast, and we're definitely going to see a retracement. I talked to a lot of people yesterday. I talked to a lot of different people, a lot of different voices, and some people just feeling, look, we're excited, but it's just too quick, too fast. And then other people feeling it might be too quick, might be too fast. But if it's a generational company, then you bet on it being too quick, too fast, and you pay a little bit of a premium. Going through all these articles, I came across a quote from Chief Revenue Officer Ryan Taylor. And I thought this quote was interesting. I forgot he said this in the moment, but it's such an important thing. Look what he said on the Q1 earnings call. With regards to landing new customers, we've sustained our high volume of boot camps with over 915 organizations participating to date to meet inbound demand. We are also seeing substantial deal cycle compression. As one example, a leading utility company signed a 7-figure deal just 5 days after completing a boot camp. Another customer immediately signed a paid engagement after just 1 day of their multi-day boot camp and then converted to a 7-figure deal 3 weeks later. We expect the favorable unit economics and higher throughput to continue to accelerate our business. Why is that important? That's really important to me because if John, I just saw your comment. Yeah, I'll pull up Peter Thiel in a second. Peter Thiel did talk at Cambridge. I'll pull that up in a second. If the street does not see increased revenue growth because the monetization of AIP isn't fully there in Q2, which means the guidance is not going to be there, but we get more indication from the company that that clients are signing on after 5 days of a boot camp. I mean, that just means that the deal cycle is starting to get compressed, as Ryan Taylor said, but also that means that they're getting such a good experience in that boot camp. And if you scale boot camps, you're going to scale conversions, then eventually you scale conversions into monetization. So this type of go-to-market might command a premium, which the market is giving generously, because the market doesn't believe Snowflake or Datadog or Databricks can go get a client and convert them after 5 days to pay a 7 figures because they don't, experience any transformational value via a boot camp, because a lot of other companies aren't doing boot camps. So this is just one data point for why, yes, the stock has run up very quickly in an aggressive manner, but there are things about Palantir that are fundamentally differentiated, and those things that are different might end up playing out going into earnings, which is why the street will get excited. Okay, here's Peter Thiel speaking a little bit about Palantir. This is okay. I'll play this clip. You have a bunch of clips, John, but yeah, Peter Thiel was just at Oxbridge or the Cambridge Union. So let's hear what he has to say. I'm not sure if it's exactly about Palantir, but here's what he has to say for 50 seconds.
For years, I bowed my head. For years, I took it, all of it. Your insults, your ingratitude, and worst of all, more degrading than all the rest, your condescension. But now it's over. It's over, do you hear? Of course, at the moment, you're still stronger than I am, but I don't give a damn for your power or for your dogs or your police or inventions. And you know why? It's because I know I'll get you. And I know that one day my...
Okay, this is not about Palantir, but Peter Thiel, but the comment John made is that Peter Thiel is you thinking of Palantir shorts. Did he actually talk about Palantir, John? Because I want to see him actually talk about Palantir. Okay, if he's not talking about Palantir, we're not going to listen to it. I need to see him. We need to see Thiel talk about Palantir. It's been so long since he talked about Palantir. He's reading like a short story or a short poem, but that poem is directed not literally at Palantir shorts, but that's what the comment is. That's what the caption is. We need Thiel and an update on Palantir. The last time we heard Thiel talk about Palantir explicitly was in 2016 when he did an interview with Dave Rubin, or 2018. And he went really in depth. He talked about Palantir in the other one. Can you link it to me, John? Can you link the exact moment? Because I want to see him actually talk about Palantir, not just his philosophical ramblings. Okay, so we'll get back to that in a second. But the point is on Palantir, at the end of the day, I do think that there is a broader argument Palantir right here, 2866, that even though it's quick, even though it's fast, there is something special about this company that Wall Street's figuring out. Now, I talked about in the video yesterday for Daily Palantir. I could be dead wrong, and this could be just retail FOMO, bunch of people aping into it, and then the stock falls because, we get some bad data or whatever, and then things go down. That could also be happening. I just don't think that's the case, given the consolidation we've been seeing at the 25, 26 range, and now almost 27 we've been at for almost 2 weeks here. It really does feel like the dips get bought up low, and that institutional money is coming in to support those dips because they want to continue to get more exposure. And we're going to see in the next couple of weeks if this can really sustain 27, 28. But if by earnings, August 5th or whatever, if we are still holding 27, 28, I think it's just going to be exciting, dude. I think it's going to be very, very exciting. And it's going to hard to see us potentially, retrace from there, especially if we have good data. But it's really a question of seeing if we can get really good data. Okay, cool. So that's what we had right there in the context of Palantir. Anything else on Palantir? I think that's the main update. We will see in a little bit on earnings what Palantir looks like, and potentially we might get some cows before that. Oh, no insider selling on Palantir. That's important to understand. It's been like a month now where we've seen no insiders take profits, which is unheard of. I mean, usually they take some profits going into a big run like this, but they have taken no profits. Here's one clip I'll play of Karp, and then we'll move on to Apple that we posted on Daily Palantir today, reminding the market that Karp thinks there is no competition.
Currently, I don't believe we have competition. We have a lot of people who are like the Palantir of Iowa or the Palantir of Harvard or the Palantir of Uruguay, but they're not Palantir. And it's going to take a long time to actually build what we have, because you'd have to actually understand what is special about the software infrastructure of having the combination of Apollo, Foundry, and the ontology. And then you would have to build on top of it so that you can actually do these handoff functions with large language models. And luckily for us, there is not a consensus at the investor level, VC level, or among analysts that we have the only thing that works, and that means there's just going to be very little investment in copying and doing what we do. And investment in what we do outside of America would be hard to do anyway, because the ecosystem, a term I don't particularly like, to get this done is in America.
Sorry, guys. The audio of the video is the audio of the video. That's the audio was turned up all the way. But the point he's making is that he does not feel there is broader competition. And look, the reason I like playing those clips is because if you're a hedge fund manager and you don't have any exposure to Palantir, I think you start asking yourself, well, wait a second. If the CEO thinks there's no competition, either the CEO is full of shit, or like I need to take him seriously. And so I think if you're a hedge fund manager, if you're someone who has a lot of capital that you need to deploy and you need AI exposure and you want to get into this bull market, and you know nothing about Palantir, but you just see that one clip of the CEO talking, first of all, you're inspired. You're curious to see what else you're going to get. I mean, there are just some people that get people's attention. It's just that simple. There are just some people that are able to get people's attention. As soon as you're talking, people want to listen to what you have to say. They're curious about your thoughts, your ideas around the world. There's something about your personality. Karp's one of those people. And if you're someone with a lot of money and you're listening to him talk and you have zero exposure and he says, we have zero competition, again, either he's full of shit, this is what you're thinking, or you're thinking, oh my God, this guy's like not fucking around. Like I really need to take him seriously. And I've been saying someone like Anthony Noto needs to make people feel like that in the context of SoFi. Someone like Alex Kris of PayPal needs to make people feel like that. It's hard to do that when, it's a company that's not as exciting as Palantir. But if you can make people feel that, you can sell anything, right? It's just how good can you sell? And so as Karp, when he says we will win, and he's serious about that, if you are a new investor to the company, even if you're retail, you might end up just buying some shares on the idea that you want to bet on the winner. Let's transition to Tesla. So let's talk a little bit let's hear from Deepwater on what they're thinking about Tesla. Then I have a couple things I want to say. And today is going to be the day where hopefully we can see Tesla try to break into 270, which would just continue to extend its amazing run.
Shares had a rocky start in 2024, down more than 20% at one point, but they're now in positive territory, up 5% year to date. Let's talk about why. Doug Clinton with Deepwater Asset Management. He's a managing partner. He joins us now. Doug, why the turnaround? Welcome.
Well, thanks, Kelly, for having me. The turnaround, I think, is all about the narrative shift from the bears saying, look, the EV conversation was too overheated. We had too high of expectations in terms of how quickly consumers would adopt EVs. it feels like we've hit the trough of that disillusionment. And now we can see the other side of that path with Tesla returning to growth, easier comps. The street has them growing kind of near 20% for the next 2 years. That's piece number one. And then piece number two is we have a catalyst on August 8th, the new robotaxi event. And Tesla has always traded well and been pushed by new product announcements, where at this event, we'll obviously see what they're doing with robotaxis. And we could also get potentially 3 new car announcements. So I think the bulls firmly have control of Tesla right now because of what's coming in the future.
3 new car announcements. I mean, we're still waiting on that. What are the Model 2? Cybertruck is kind of off to its start. What is the valuation right now? I was reading, is it north of like 90 times forward earnings right now?
If you believe in the street numbers, it's roughly in that range. And I think to your point about valuation, that's really probably the question you need to ask going forward. So if you're trying to play this for the next month, you're looking at just this August event, it's hard to see why the narrative would shift between now and then. After we see what Tesla comes out, then I think you have to ask that fundamental question. And I'll use NVIDIA as an analogy. You know, we've seen NVIDIA stock go up 200% over the last year. Their business has also grown 200% on the heels of very rapid AI demand for their products. I think the question we'll have to ask ourselves after the August 8th event is there a new product here, whether it's robotaxi, whether it's potentially new vehicles, that makes us re-rate how we think about the business by 50% or more, thinking about the stock going forward? Because to your point, the valuation, if nothing changes, does feel rich.
No, I think you have to credit them for all that they're doing on the AI self-driving, full self-driving robotaxi front, because if it weren't for that, the stock would be doing a lot more poorly. And I think there's an element of truth to both sides, both those who say, no, it's just a car company. In large part it is, but also those who say, no, it has transformative capabilities. I mean, there's people now letting their Teslas drive them around to a large extent, and that's something that no other car maker is currently making possible. Can they kind of keep that edge, though? I mean, especially given what's going on with a lot of the Chinese manufacturers.
I think they can keep the edge. To your point about FSD, I mean, they have hundreds of thousands of users using their full self-driving technology, and no other car manufacturer in the world can really say that they have that much real-world data, and data ultimately is what drives intelligence and AI. So they do have that advantage. I think that will be hard to overcome. And you look at some of the traditional automakers. I absolutely think the traditional automakers will have plays in EVs and with autonomy, but they've had struggles too. You know, they're not focused on it like Tesla is. It's only what Tesla does. It's what they focus on. The traditional automakers have to balance a legacy business with what they're doing in EVs. And we saw VW just recently closing plants in the EU around that.
Yeah,
So Deepwater's bullish. Obviously, if you're bullish, you do not care about the car business anymore. I mean, that's important. You care about autonomy. And Tesla, again, every dollar, that's $3.1 billion in market cap. It's basically added $330 billion in the past month. So 264 right now. I think there's a shot it breaks to 270 today. We got to see how the broader market reacts. The CPI report is bullish, and you know, it's good for the markets. But now it's a question of just like how much more momentum does the market have to keep buying this stuff, at least in the short term. If it breaks 270, it gets exciting, dude. It's very, very exciting. Rocket Lab right here up 1%. IWM up 2.36%. SoFi up 3.5%. 680. S&P 561 basically flat. Palantir's up almost 1%. Microstrategy, if you didn't know, they're doing a 10-for-1 stock split. $13.95 for Microstrategy. And then Bitcoin right here up about 2% today as well. SoundHound is up. Yes, SoundHound is also up. I don't exactly know why that one is up. I would just be careful with SoundHound. I know it looks attractive at $5 and it was up 30% yesterday. This thing is up 500% in the past couple months. So just got to be a little careful here and really understand the company before, you know, getting excited that it's an AI name, because I don't know if it's going to just explode because it's an AI name. Because it is kind of meme-ish, right? This one is like actually, you know, Bill Gross at Tesla's a meme stock. SoundHound is actually a bit more of a meme stock. But the point is, there, you know, AI is still asking for a bit more exposure, and Nvidia right here at 136 continues to get that exposure as well. Okay, so now a couple of things. Did I miss any more miso soup jokes? No, you didn't. You didn't miss any miso soup jokes. So there's a variety of things we have to look at. First, I think let's look at Let's look at 2 Dan Ive tweets, and then we're going to go to Kathy because we got to talk about Kathy. So 2 things Dan Ive said today. Number 1, on Tesla. Would a Trump in the White House presidency be good or bad for Tesla? We believe a Trump presidency would be overall negative for the EV industry, as likely the EV rebates and taxes incentives get pulled. But for Tesla, we see this as positive given scale and scope advantage in this backdrop. So I guess what he's saying is like, hey, Trump would be bad for like Rivian and Lucid, but it would be good for Tesla because Tesla already has a dominant advantage. I don't know if exactly that's the case. The only thing I think that's actually true about this is that Elon is friendly with Trump and Trump likes Elon. So that partnership might be good for Tesla. I don't know if necessarily it would be, it would result in a lot of benefits, but at least Dan says, hey, Trump is not bad for Tesla, even if he's bad for EVs. And then on Apple, he says, we now believe initial iPhone 16 shipments will be closer to 90 million, with more upside movement likely as we get closer to launch date in September versus the original expectations of 80 million, and double-digit up year over year. The AI-driven supercycle is on deck. He has a $350 or a $400 price target on Tesla, $275 on Apple. So he thinks there's 2 catalysts for Tesla and Apple. For Apple, it's this AI-driven supercycle, and for Tesla, it is FSD and autonomy being solved. And if those 2 things kind of play out, then we're likely going to see a lot more momentum. Matt says it's going to be harder for other EV companies to compete without a tax credit. Yeah, I guess that's the argument he's saying, that if the EV tax credit goes away because of Tesla's competitive advantage in the broader EV sector, they will benefit from that, which actually does make sense. I mean, it's just like your competitors, it's harder for them to eat if the policy that was helping everyone doesn't end up playing out. But I do think there is maybe an argument that Trump gives Elon some type of friendly deals and stuff, given that they're getting closer. He's definitely going to acknowledge him, whereas Biden really hasn't acknowledged Elon. And maybe that somehow helps Tesla as well. Thomas says, Elon has said in the past he'd rather see no subsidies for EVs, and I can see Trump doing that. If that happens, Tesla is the only reasonable option. Yeah, that is a fair point as well. In terms of the presidency, George Clooney did come out yesterday, and he said Biden should step down. That is a pretty big deal for the Biden campaign, given that George Clooney is a avid supporter of Obama. He held a fundraiser for Biden a couple weeks ago as well. So we're going to see what happens with the presidency, but it seems like it might be Trump versus Biden. If it's not Trump versus Biden, it'll be someone else versus Trump, and those will have implications on Tesla and the broader market. Okay, Kathy, let's talk about Kathy. So this was a really interesting thing that I read yesterday, which was Kathy's mid-year update to investors. And quite frankly, it was a little sad reading this. I'm not going to lie. And the reason it was sad reading this is because Kathy basically was acknowledging that the performance has not done well this year. And as you can see, the title is What We Do, a letter to investors from Kathy Wood. She's trying to justify why you should keep investing in the ARK ETF, even though things have gone bad. So let me read a little bit from the executive summary, and then I'm going to read the conclusion. You can read the entire letter. It's a long letter where she goes through a lot of data, but 2 parts of it that I thought were interesting. So first, in the summary, as an investor in our funds ourselves, I understand that volatility can be frustrating and unsettling. Hit disproportionately by the record-breaking interest rate shock in 2022, ARK, our flagship fund that offers thematically differentiated, nearly pure play exposure to disruptive innovation. I think a lot of clients reading that sentence, pure play exposure to disruptive innovation, are really pissed off because the Mag 7 have been the most innovative over the past 2 years, not the Teladocs of the world. And so that's why they're kind of annoyed that she's still holding on to this argument. Even though it remains 72% below its peak, while broad-based benchmarks like the S&P 500 powered by very few stocks are reaching all-time highs. Acknowledging fully that the macro environment and some stock picks have challenged our recent performance, I would like to communicate why our conviction and commitment to investing in disruptive innovation have not wavered. First, in our view, many stocks associated with truly disruptive innovation have settled into rare, deep value territory. I also think investors are really pissed off if they hear her say deep value. She's been saying this since 2022, and you either believe Zoom is deep value or not. And if you don't think it's deep value, or Path is deep value, if you don't think it's deep value, then you're probably annoyed right now. Second, if interest rates unwind, we believe ARK's differentiated disruptive innovation strategy should benefit disproportionately as they did in the fourth quarter and during the coronavirus crisis. So if we look at ARK right now in the pre-market, ARK is up 1.46%. So a good CPI reading is good for ARK, but ARK is still down 9% year to date when the S&P is up 20%. And so that divergence is getting people a little bit upset. Then she says a bunch of things about AI, how to harness technology, yada, yada. If we go to the very end, here is her conclusion on how investors should think about this. Even if we are wrong that inflation and interest rates are poised to surprise on the low side of expectations, ARK strategies, beginning with ARKK, have paid the dues associated with the higher interest rates and are offering a highly differentiated exposure to innovation. Basically, they're saying, hey, this is the bottom. Like, we bottomed out, shit hit the fan, but now it's time for us to go up, especially given record-breaking mega cap concentration to the U.S. equity market juxtaposed against bargain basement valuations in small to large cap equities to the disruptive innovation space. She's saying here, Amazon's fully valued, Path is not. You're going to get more money buying a million shares of Path versus a million shares of Amazon over the next 5 years. If inflation and interest rates do surprise on the low side of expectations, much like the equity market began to discount last year, that tailwind could reward equities focused on truly disruptive innovation disproportionately. Okay, now, what's the problem with what she said? The problem with what she said at the end of the day is that her argument now is contingent on the fact that if inflation comes down, which it looks like in September, we're going to see a rate cut because inflation is coming down, ARKK will perform incredibly well. I don't know if the picks that Kathy has are going to take this ETF to the next level. The only picks I really agree with are Palantir, Tesla, and Coinbase. And then she's got Robinhood in there, but she's going to eventually have to sell out of Robinhood once it gets too high because of regulations. So, I mean, really, she's got three names, Tesla, Coinbase, and Palantir, that I agree with. You can put Rocket Lab in there, I guess, but that's a little bit more of a 5-year time horizon. I guess SoFi, but the market's really got to start valuing SoFi differently. The other names, I don't believe in too much. Either she's right about the sort of genomics revolution, and that takes the ETF higher because she has a ton of those genomics names, or the Paths of the world, the ones that she buys the dip on, actually rip. Path right now up 1.57% in the pre-market. And so this rate cutting cycle is going to be a referendum on what's going to happen with the ARK ETF, because if the ARK ETF can't perform in a rate cutting cycle, then it just means the stock picks are bad. Now, granted, she's overweight Tesla and Coinbase. And so I think Bitcoin going up means Coinbase goes up. And then obviously Tesla, if they can continue their run, that's going to help. So Tesla and Coinbase theoretically might be able to save the entire fund and deliver outsized returns over the long term. But I think those are going to be the core names that are built out of the ETF. I just felt reading that letter, I would not be excited to invest in ARK, because she's essentially saying we got the entire macro landscape wrong. We bought the most interest rate sensitive stocks when interest rates were rising at the highest rate in 40 years. She basically is blaming Jay Powell for rising interest rates, even though I think Jay Powell did what he had to do. Inflation's coming down, and so he did the right thing. And she's not really taking accountability in the context of, like we bought Roku at the top. But she's saying that interest rates coming down will help ARK. Maybe she'll be right about that. But if not, then obviously investors probably will just keep leaving the fund. NVIDIA right here at 135, S&P 561. So S&P is flat, even though we got a good CPI, and that makes sense. The S&P ran up a lot yesterday. I wouldn't be surprised if it goes red, but also wouldn't be surprised if it goes green, because that CPI report was what we needed. Robinhood 2257, Rivian up 2.93% at 1686, TSM up 1.22%, Amazon at $200, Apple right here at 232, and then GameStop up a little bit at 2%. SoFi up 3.5%, 657 to 680 on the day. Meet Kevin's PP is over $30. Well, it makes sense. It's overweight Tesla. He sold NVIDIA for Tesla a couple of weeks ago, so that makes sense as well. She has a lot of bad picks and missing a lot of good ones. Yeah, and it's not like she has only bad picks. She has some good picks. The problem is, like, the DNA one, I think, is what got people really upset. Like that one, she loaded up 300 million shares, and now she's basically out of it. Picks like that money could have just been allocated in so many better places. I think the broader problem people have with ARK is that she doesn't believe the Max 7 is disruptive innovation. And, like, yes, maybe, cloud computing is not disruptive innovation, but the point is it creates revenues, and it creates revenues that are only growing more and more in the age of AI. And I would say Apple, with their new AI operating system for the iPhone, I don't think the Vision Pro was really disruptive, but the AI for the iPhone OS might be very disruptive to the broader AI ecosystem and bring billions of people access to what it means to interact with a large language model. Most people don't know what an LLM is. I mean, if you ask your friends or family members, most people do not know what an LLM is. And so a lot more people are going to get exposure to what it is over time, but it's going to take time, and maybe Apple is what gets people integrated into that ecosystem. Cool. So that's what we have right now. MicroStrategy up 6%. Yup, they announced a 10-for-1 stock split. So that is why MicroStrategy is up right now. Cool. Okay, so we have 11 minutes until the market opens. Let me bring up a couple of other things. Yardeni, he raises price targets at 5,800 from 5,400. He thinks 8,000 by the end of the decade. So we're given the CPI report, for those that are just joining, 3.0% versus 3.1. We're probably going to see more momentum in the broader ecosystem for equities and for fund managers that are going to raise their price targets, because they kind of have no choice but to raise their price targets with this type of inflation reading. Bitcoin ETF brought in $147 million yesterday. The day before that brought in about $300 million. So nice to see Bitcoin is continuing to get more inflows. It's kind of what we need to see from Bitcoin to keep getting momentum. And you got Elon Musk right here, who actually responded to Andrei Karpathy. This guy used to run AI at Tesla. He was the director of AI. He says, every time I diversify, I lose money. And you got Elon. This is the first time in a while Elon put the Tesla symbol right under his tweet, TSLA. He usually doesn't tweet anything about Tesla because the SEC is like, like if you use the exact symbol or whatever, the SEC gets upset. But I think Elon at this point doesn't give a shit about the SEC anymore. And he's basically saying, hey, why don't you just keep all your money in my company, the company you used to be at, and go all in? Does anyone know why Karpathy left Tesla? Was it like was it like beef with Elon, or was it actually something that's did he just want to like go his separate ways and do something different? I actually don't know why he left. I don't think it was necessarily beef. I think it was just he wanted to explore different things. But it seems like, owning Tesla stock has not been the worst for him. Shout out to the people. Shout out to the directors who sold $180 million worth of stock at $160. Do you remember that? I don't know if it was Drew Baglino and Rohan Patel. I know those guys left, but it was some director that at 170, they dropped $180 million worth of stock. And everyone felt, all right, Tesla's, I mean, if the executives are leaving and they're dumping stock, it's bad, including me. I was like, damn, like this is not a good look. They missed out on an 80% gain from there because of that sell. So I don't know if they feel the best about that sell. Okay, we got 8 minutes until the market open. We have two earnings that I just realized we have this morning. Earnings season is officially here. Delta, which is down 7%. That fully goes against my thesis about, hey, airlines are doing well, so why the hell is Delta should do well? Yeah, I was wrong on that one. Delta, that seems like they did not do well. Something's wrong with Delta. Let's take a look at that. And then Pepsi had earnings as well. Pepsi earnings, Pepsi's down 2%. Okay, so we start off earnings seasons with two companies that shit the bed, Delta and Pepsi. Now let's see why. What's going on with Delta? So let's take a look right here on Delta. Delta down almost 8%. Let's see what happened. Delta expects sales to rise no more than 4% below the 5.8% growth analysts expected. Adjusted earnings per share, $2.36. Revenue, $15.4 billion versus $15.45. So slightly missed on revenue. CEO said the second quarter was really strong performance. What you see happening is the impact in the domestic marketplace to the lower fare discounting that's been going on this quarter. And CPI supports that because airline fares are down 5% month over month. Yeah, airfare in June was 5.1% lower than it was in 5.7 based on the CPI report. Why are they down then? What happened? Why are they down? Is it guidance? I feel like it has to be guidance. Airlines are facing higher costs and increased industry capacity that has driven down fares compared with last year. Oh, net income is down 30%. Okay, so their profitability suffered. Their profitability is what suffered. Interesting. I don't know if that's a reason necessarily to take it down 7%. Now, the thing about Delta is, although their net income is down, Delta was up 18% year to date. So it's not like it's falling off of no momentum. It's falling maybe because investors saw that they're up a lot of money on Delta, and as a result, they're going to take some profits. But the good thing is, the tailwind for Delta is if airline fares if more people are just traveling in general, if they can increase some of their operational adjusted operating margins, along with the decrease in airline fares that we're seeing across the entire industry, although revenue might come down because of that, the volume could make up for that. And if they increase their margins even slightly, it's going to be easy to beat the profitability quarter over quarter, given that it was down this quarter 30% year over year. So maybe that's actually setting them up to have a good Q3. But Delta is down 8% right now. in the pre-market. Okay, Coca-Cola's or not Coca-Cola, Pepsi's earnings. So they beat on EPS by 5%, 228 versus 216. Revenue, they missed 22.5 versus 22.6 billion. So they were down slightly on that on revenue. I don't know if that's enough though to necessarily for the street to be super, super upset. Here's the press release from Pepsi. I'm really curious what they have to say about Celsius. I'm going to listen to the earnings call and see what they have to say about that. Revenue growth is up 0.8% year over year. So obviously Pepsi's a company that's not dramatically growing. They do give a 3% dividend, which is one of the reasons you probably buy Pepsi. Year to date, it's up 1.5%. Over the second quarter, up 0.8%. CEO says during the second quarter, our business delivered net revenue growth, strong gross operating margin expansion, and double-digit EPS growth, remaining agile despite facing difficult net revenue growth comparisons versus the previous year. Subdued category performance with the North American convenient foods and the impacts associated with certain product recalls and Quaker Foods North America. For the balance of the year, we will further elevate and accelerate our productivity initiatives and make disciplined commercial investments in the marketplace to stimulate growth. So basically, they're saying we're probably going to be flat, but the dividend is there. And they're not necessarily declining. And if they are declining, it's because the comps last year were a little harder to comp against. So that's why the stock is not really moving that far to the upside or the downside. Do people here drink soda? Do you guys drink soda? Is that part of your daily life? I know there's like a movement to like not drink Coke and Mountain Dew and all that stuff anymore. But I'm curious if people actually still drink soda every day. TNA is up as well. Yeah, TNA is up 6%. So this is the triple leverage fund to IWM. IWM in the pre-market, again, for those that are joining, CPI came in at 3%. That's doing pretty damn well. 2.27% on the day. First time we've had a 2% green day on IWM, which is basically the index for small caps in I think a couple of weeks. So TNA definitely benefiting from that, given it's up. Leverage to IWM. Taweed says a Celsius every day. I just can't get behind Celsius, dude. It just does not taste as good. Most people are saying no. Okay, that's good. Most people are saying no. Obviously, soda is definitely not good for you at all. Manuel says, how was CPI? I just got here. CPI was really good. 3.0 versus 3.1. The market likes it, and now we'll see kind of how it plays out. We call it pop. There are like new soda. There's like new brands. I think it's called Poppy that are like 0-calorie soda. So it's like it still has the caffeine and like the carbonation, but it's 0 calories. So there's like new innovative, I guess, brands trying to tap into how people access the taste. It's basically Diet Coke. That's basically what it is with different flavors. But it does seem that people are drinking less of it. Palantir in the pre-markets, 28.53. Today's going to be very important in 3 minutes to see if Palantir can maintain 28. Yesterday was a very, very exciting day for Palantir, getting to that $28 level. We didn't close at 28.03. We closed at 28.42. So it was a really aggressive close at $28. And it was exciting to see that close. And now it's just a question of if we keep going. By the way, speaking of Peter Thiel, I found a better clip on Peter Thiel talking about Palantir. Here's 30 seconds before we get into the market open about him explaining the big picture for why they ended up creating Palantir. This is from 2018.
The big picture for PayPal was sort of to revolutionize money and payments. The big picture for Palantir, sort of like in the wake of 9/11, a few years after that, could one do something from a libertarian or civil liberties point of view that would still be, tough on terrorism? The sort of sense I had was that the way we were going with just ridiculous airport security checks and super intrusive surveillance all the time, wasn't really making us safer. The big picture with PayPal was sort of the revolution.
So again, if you're a hedge fund manager, I like bringing up these clips because if you have no exposure to Palantir and you start discovering this Peter Thiel guy, I mean, you probably know who Peter Thiel is, and you're seeing him talk about how, hey, can we take the fraud mitigation algorithms in PayPal and apply it on a government perspective via terrorism? They did that 20 years ago. Now the business is generating close to 1.5 billion off government revenue, and it's not just working in the anti-terror space. I mean, you start to really ask yourself, is there something here that you missed that's special? And I said yesterday, Wall Street missed it at $6 to $10. Retail understood. Retail was excited by something about Palantir, the aura, the mystique, Alex Karp's crazy hair. Something got us into it. We got excited. we have that competitive advantage as being a retail community. And now the street has to think, did we get it wrong? Is there something here that's fundamentally differentiated? And if there is, maybe they buy at some of these elevated prices. All right, here we go. Getting into the market open. It is Thursday, July 11th. Thank you, everybody, for being here. CPI came in at 3.0 versus 3.1, 9:30. The stock market is now open. Wake your ass up. Palantir goes red as we open. We jumped to 28.58. Now at 28.39. Now we're back green, 28.44. The fact that we're holding 28 and it's not a sudden drop to 27.90 or 27.30, it means there's a ton of buy orders that are coming in at this $28.30, 28.40 level. And so really interesting. The sell side is not immediately demolishing the stock. I mean, yes, we've got a red candle there, but it's not like taking it down to the 27s. It might, but as of now, it's holding up a little bit. As I say that, we're going down to 28.21. So there's going to be a test for Palantir. Can we hold that 28 level? Can we really hold that 28 level? Or do we dip into the 27.80s, 27.60s, and then come right back if we come back? We'll see what happens there. All right, let's look at some other stocks, and we'll get back to Palantir. Tesla, 264, opens green. Rocket Lab, up 2%. Wow, 524 on Rocket Lab. SoFi, up 3%, 676. SoFi did go down to 616 2 days ago. Anthony Noto, we'll talk more about him in a second, but he spoke on CNBC yesterday. Seems like investors are excited. CPI is coming down. We're likely going to get rate cuts. That's good for SoFi's business. So SoFi up 2.74%. S&P green, 0.05%, but it is still green. Robinhood, 22.60, up 1.2%. Rivian, 16.94, looking like it's going to touch $17, up 3.36%. AMD is up a little bit. AMD broke out yesterday, up 5%. Right now, 185, up 0.89%. On the day, Costco is up because they raised the membership prices by $10. No one's going to cancel their Costco membership. You can only do this if you feel the consumer is strong. So this is another data point going against the argument that the consumer is weak if Costco is able to raise prices. Spotify also did this a couple of months ago, and Spotify got rewarded. So if you got a loyal user base, you can probably get away with this. Bitcoin is up 2%, trying to get to 59,000. Intel, $35. TSM is $3 billion away from being a $1 trillion company. Wow, a $1 trillion company in the context of the semiconductor space. Apple at 231, Amazon at 200, Chewy, that's up 2%. GameStop at 25.49 on the day. Where is Palantir? Wow, Palantir is still 28.34. Look at that bounce. Went down to 28.13, and instead of falling into the 27.90 range, it maintained 28.30. That's pretty damn incredible, dude. I mean, it's just maintaining 28 to me is so damn impressive. Like, I really don't care if we get to 29 or 30 today. I want to see can we go a second day in a row holding 28, because that's not going to be easy. But if the buyers are there, maybe that momentum happens. 5 million shares of Palantir traded in the first 2 minutes. That is extraordinary volume on Palantir. So 5 million shares right there for Palantir. Rocket Lab is up 1.3%. Tesla 263. ARK Innovation at 46.64. That's up a little bit. Let's go to NVIDIA. NVIDIA is red, 134. Seeing a little bit of downside there. Maybe NVIDIA is transitioning into IWM. Russell is up 207, up 2%. So TNA is up 6%. Maybe, let's see, maybe people are selling some NVIDIA and they're putting into small caps. We'll see later how NVIDIA performs. NVIDIA was up 5% yesterday, or not 5%, 3%. So people might be taking profits, but that was not bad to see. SoFi, 681. Look at that. SoFi might try to make a run to $7 again, which psychologically would be very, very important for the stock. Not bad. Darian says Costco is about bulk purchasing to save money. If the consumer is weak, they'll keep Costco so they can save money on bulk purchases and not spend in other areas. Yeah, that's a good argument. So obviously Costco is not like Target, and Costco is about bulk purchasing in the context of saving money, which is why you could say that the consumer is weaker if they're shopping at Costco. I get that argument. However, if you look at Costco's numbers, specifically in May, which were the last monthly metrics they gave, and I think it's up like 8% year over year, the numbers are just insane. And either you can attribute the numbers to, more people are leaving Target and they're going to Costco because the consumer's weak, or it could just be, hey, people want to shop at Costco. And yes, they want to get a discount. Obviously, they don't want to, pay elevated prices, but that doesn't mean the consumer is weak. And if they're able to pay an extra $10 a year, which most people probably are, Tesla breaking out right here at 266, then that's something that's beneficial for Costco. The point I'm trying to make is if there was an economic recession impending, Costco could not raise prices. Neither could Spotify, right? Like when people are struggling to pay rent, they can't worry about paying an extra $20 a year for some random subscription that they could cancel easily to, save on expenses. So the fact that they're raising prices, at least to me, believes that they have enough brand loyalty, which is a Costco thing. That's not a consumer thing. That's a Costco thing. Like Target, I don't know if they have a subscription, but they probably couldn't do that because people might not pay for that because they just don't have the loyalty. And that's why Costco is getting momentum. So there's an argument for why the consumer could be weak there. There's also an argument for maybe why the consumer actually just benefits from a good company doing good things. Robinhood right here, 2279, SoFi 683, Rocket Lab 520, Carnival Cruise. Let's look at the cruise lines. Wow, that's down 1.52. That's weird. Cruise lines are down. Interesting. That is weird because CPI came in lower than expected. That's weird. Norwegian also down. There has to be something going on with all the cruise lines. There has to be something going on. Yeah, all the cruise lines are down 2%. That has to be a cruise line thing today. That's weird. I thought they would be up as rates come down. KRE, the regional banking ETF, that one, wow, $50. There you go. So TFC, I imagine TFC is up. Yeah, TFC is up 0.85%. JPM, the banks are probably up. Well, JPM's down. It's not a regional bank, but bank earnings will be tomorrow for some of the big boys. Banks right now, most of them are green. So PNC is green. Nubank's had a hell of a year at $13. That's green. Barclays green. TD is green. TFC is green. KRE is green. And then SoFi right here at 683 is green. Wells Fargo and JP Morgan are down a little bit today. Costco gives you 2% back and pays for the membership. Wow. I didn't even know that. I didn't even know Costco gives you 2% back. Yeah. I mean, look, Costco's just a good deal. I get that some consumers maybe are getting stretched at other retailers, and so Costco is a cheaper option. So that could be an argument for consumers are being weak, but also the brand of Costco is so special, and you're willing to pay that extra $10. And again, we talked about this yesterday. Costco saw a deflation in July of 2023, so they lowered prices. Target did not. And so Target kept prices raised. They had to lower prices on 5,000 items 2 months ago because people stopped shopping at Target. They went to Costco. And Costco was just smart. So I think it was good business on Costco, and that's why their stock is benefiting. TFC right here, 39.58. NVIDIA is down 134. Where's Palantir? Wow. Still holding 28. Still holding $28 for Palantir. Pretty damn incredible, dude. Pretty damn incredible. Not bad. Is PayPal moving? Do we got PayPal moving? PayPal right here, 60. PayPal's up 2%. Maybe CPI is coming in lower is going to help with rate cuts, and the market's going to get excited for PayPal when it comes to rate cuts. Where's Robinhood? Robinhood, wow, 22.93. Rate cuts definitely good for Robinhood's business. So Robinhood up 2.62% now on the day. SLG, Chris is saying, look at REITs. Yeah, SLG's up. There you go. 4% on the REITs. I mean, a lot of sectors are going to do well. Regionals are going to do well. REITs are going to do well. Obviously, big tech continues to do well. Crypto, if Bitcoin continues its momentum, where's the crypto stocks? They're going to do well. All of this is based on the fact that we beat expectations on CPI. Wow. Microstrategy is up 9%, 8.5% right now 7.8%, 1407. Bitcoin 58,000. Coinbase is up 2%. CleanSpark's up 4%. IREN's up 6%. Cypher's up 4%. MicroStrategy's up 7.9%. Bitfarm's up 4.4%. And then Riot up 4.4%. Marathon up 4%. Ethereum back above 3,000. It was at 2,800 last week. So nice little swing on Ethereum. And then Bitcoin right here at 58,715 on the day. You only get 2% back if you have executive membership. Okay, so they increased their executive membership by $10 and the regular membership by $5. Again, if you have regular or executive, you're probably going to be paying the $10 and $5, dude. Like, I don't see anyone canceling that. Costco also has one of the strongest brand and private labels. Yeah, Kirkland is their private label. And it's just like, it's just hard to see people not being faithful to that. So makes sense for Costco. Let's go back to Palantir. What do we got on Palantir? 28.27. So Palantir still red on the day by 0.5%. That was expected given it ran up a lot yesterday. My biggest thing for Palantir is, do we close above 28 2 days in a row? And do we normalize that $28 price? Because the more we do that, the better chance we have of breaking through $28 over the long term. Snowflake's up 2%. Celsius up 3.3% of the day. Alibaba up 2%. Starbucks up a little bit. Where's Nike? Nike may be getting a bounce. Yeah, Nike up 0.26% off a lower CPI. Chris said, I'll start to buy SoFi at 615. Chris, SoFi was literally at 615 2 days ago. You had your 615 dip 2 days ago. Now, I don't know if we get back there. I mean, so let's talk a little bit about Noto. Noto had, I thought, a really great interview yesterday. He talked about politics, which can be isolating, but I think to me, it was just him having some balls and being like, you know what? I don't really care. I'm just going to say whatever I want. And I think he's so annoyed at the stock at this point that he doesn't care what other people think. And he's just like, look, if this is what we needed to do, this is what we need to do. I'm going to be explicit about that. He talked about lending. He talked about rate cuts, helping personal loans. He kept saying we need rate cuts to get things moving. One thing that he didn't say, which I agree with my good friend TJ the Wheel Deal on this, that I think is very important, is he didn't talk about them as a tech business. So TJ has like, I don't know, he has like 180,000 shares of SoFi or something. So this is coming from his perspective here. Change the narrative already. Talk all things Galileo if you want people to look at SoFi as more than a bank. We get it. Banking is good, but it isn't the reason most people invested. Let's see the technology growth or take it out the name or just be another bank and get your shitty ass multiple. That's right. I said it. I agree with him here. The whole interview for 8 minutes, Noto's talking about loans and student loans and rate cuts and the capital environment. Not one mention of Galileo in a substantial or meaningful way as like the AWS of fintech. And I think TJ has such a good take there, which is like, you can't be asking for a SaaS multiple if you're not talking about yourself as a SaaS. I mean, if you hear Karp talk in the earnings call, Karp's not talking about Palantir as a SaaS company. Karp's not talking about Palantir as a tech company. Karp's talking about Palantir as the company that's going to save the planet from the apocalypse. That's how Karp talks about Palantir. And so then when you think about investing in Palantir, you're like, man, if this guy's this bullish, fuck it, I'm just going to buy some shares. That's how Noto needs to talk about SoFi. He needs to talk about SoFi as the next coming of the banking industry that saves the institutional infrastructure of financial demise. Like, he needs to go so deep into explaining why SoFi is going to save the banking sector, which they kind of have an argument that the legacy banks are old and boring, and SoFi is this new online digital version of it. But he needs to come at it from a tech perspective, and specifically from a B2B payments perspective, like competing with Stripe, which is what Galileo does. And that's not really what he's doing. And if he does do that, maybe the street changes their narrative and gives them a multiple. All right, Palantir fighting for $28 right now. Looks like it's going to hit below 28 right here, 28.04. If it doesn't hit below 28, I would be shocked. I would imagine there's some weakness here and we get back to 27.90. Wow, look at that. It's really fighting to hold 28. All right, there you go. 27.98, down 1.55%. Let's see if it holds on. So now we're looking for a candle that bounces off this 27.90. I would say it could bottom out here like 27.75 and then make a chance to bounce back up. Or you could just see some increased selling pressure. It's fighting pretty nicely at 28. 27.99, 28. We'll see. We'll see how that plays out. Chris says that's because SoFi is a bank. Well, yeah, that's what I would agree. I think SoFi is a bank, and that's why it's hard for Noto to talk about SoFi as more than a bank. But I also think the SoFi bulls really, really need to ask themselves, how do you ask for a SaaS multiple, but the CEO is talking about it in the context of lending risk and in the context of interest rates? Like the CEO cannot go on national television talking about it as a bank, and then you're asking for a SaaS multiple if the CEO himself barely mentions that it's a SaaS. And I think if Noto's tone to SaaS versus bank doesn't change on earnings, Palantir back at 28, then we could potentially see a pump and dump again, where it runs to like 850 and then it just falls back again, because the credit risk, which is the part that everyone cares about, is not going to go away. Even if it's below expectations, it's not going to separate SoFi from just being another bank. And so that's what I think really has to change on earnings, and see what he can say. Tom says, admit, if my bank didn't talk about that risk, that would scare me more. Well, yeah, I agree. I mean, he has to talk about that risk, but I mean, for 8 minutes for no mentioning of Galileo, of this like thing you paid $1 billion to acquire in 2020 as the tech side of your business, that to me is just like, okay, well, there's an issue here in terms of the communication. And the communication is really bad from the tech side. Microstrategy is up 6.3%, S&P 561, Tesla 264. SoundHound is up 16% after being up 22% yesterday. I don't really know what the catalyst is here, other than they launched their AI chatbot in Europe. So I would be a little cautious of this one. This one definitely feels a little bit more memey. But this one is up 17% on the day. AMD 185, Rivian at 1659, and then Bitcoin here falling a little bit. So some of the Bitcoin stocks taking a dip at 58,404. It's a 3-minute interview. No, it was more than a 3-minute interview. These are bad excuses. It was close to 8-10 minutes. He could have talked about it. He could have put it in there, dude. I don't think he had much to say. That's the issue, dude. And that's because they're not public about Galileo. They just don't talk about it enough. But my point is, I thought, and again, this is not me saying it. This is TJ. TJ is like, hey, I've got 200,000 shares of this fucking stock. Everyone wants it to be valued like a tech company, like a Palantir. But the CEO keeps talking like it's a bank. Like there's an issue there. And I think he's right. And that issue has to be changed. Hopefully with communication. All right. What else do we have? What else do we have right now? So we looked at the inflation news. Obviously, inflation came in lower than expected. That was good. Where is Tesla right now? Tesla 267. That's a breakout. Up 1.4%. It was just at 262 like 5 minutes ago. There you go. Let's see if Tesla can try to crack 270. That would be incredible. Oh, wow. Palantir. What a bounce. What a freaking bounce, dude. What a bounce. Is Palantir, you know, these startups are renting out GPUs. I think Palantir is renting out some fucking trampolines because that was a bounce, baby. $28.20 from $27.93. Looks like the street wants it at 28. Let me look at the order book flow on Palantir. Let's see where the resistance is. The resistance on Palantir is not in the 29s. There's a path to 29s. At 30, I mean, again, even at 30, there's only 14,000 shares. Now, again, my book volume is not perfect, but I don't see massive resistance at all. There's not any walls. I mean, it needs the buyers and the volume to run, but there's not like there's a wall at 28.30 that there's like 400,000 shares waiting to be sold off. Let me check Tesla as well. Tesla at 270, I imagine there's a lot of shares that are going to be up for sale. Holy crap, dude. Look at Tesla, 267.60. Robinhood, 2277. Tesla has a wall. They have a wall at 269. They have a little wall of 30,000 shares. Or sorry, 100. So at 267, they have 103,000 shares. Okay. So 100,000 shares are waiting at 267. Or sorry, not 267, 270. So 269.9 basically. So if someone can buy up 100,000 shares as it gets closer to 270, it can break through to 270. It could happen. Let's see. Could you check NVIDIA? Yeah, let me check NVIDIA. Wow, 268 on Tesla. Holy moly. On NVIDIA, the only wall on NVIDIA is at 139, and there's about 1 million shares waiting. So whoever has 1 million shares times 130, whoever's $140 million when it gets to 139, we need you to press the buy button on Robinhood and buy up that stock. So yeah, NVIDIA is going to be a little tougher to get to 140, but Tesla and Palantir, 29 and 270 maybe is possible. I know I'm asking a lot for Palantir to get to 29, which is why today, if we close above 28, I'll be very happy. I don't need to see 29 if it happens. I mean, even yesterday, I didn't need to see 28. I was doing some work, and then I look over, and then I see Palantir at like 28.03, and I'm like, huh, it's above 28. And then 2 seconds later, it's at 28.17, and I'm like, oh shit. And then like at least probably, I would say 30 minutes later, it's at 28.50. And I'm like, oh my God, like it's happened. Like it's really bursting out. Tesla right here, 267. So I didn't expect that from Palantir yesterday, but that did happen. And now if we just hold 28, that would be nice to see as well. Salesforce is rocketing. Salesforce is up. Let's see Salesforce. Wow, 254. Okay, so Salesforce getting some momentum. Amit, did you look at Chad's tweet yet about Palantir competition? Well, I looked at that tweet last night because Chad and I were texting about that tweet that he put out today. So let me pull it up right now. Let's read Chad's tweet. And yeah, this is one of the reasons he put out this tweet is because I don't know if you guys saw, but Chad got followed by Gary Tan yesterday. Gary Tan is like a legend in Silicon Valley. He designed the Palantir logo, and he now is the president of Y Combinator. And so I was like, Chad, if you're getting follows by these big guys, we need you to start posting like really valuable shit not just memes and not just like little paragraphs, but like, let's go in depth. And so we came up with this yesterday. So I'm reading it for the first time in depth here today, but we were texting about this last night. And so far, it's already doing well. He got 147 likes in about 40 minutes. So not bad. It seems like these long posts will do well. Okay, so let's read from this. This is Chad, chief architect at Palantir. I had an introductory call with a $100 billion business yesterday. During the conversation, I was asked, so who are your competitors? Snowflake, Databricks, Fabric, etc. I replied, yes and no. Those are just one, maybe two blocks on our architecture diagram. Yes, you need to get your data into a unified space, but that's like one small step. I then proceeded to give them a demo of Palantir AIP and Foundry. The CAIO responded, so you are more like a whole cloud. How are you different from the cloud providers? Oh, this is really good. I answered, we have a fully integrated tool chain that works seamlessly together, a tool factory. With cloud providers, you still have to stitch together things and security models vary. The only thing you get is a single bill, not a single ecosystem. The same problems exist with buying a slew of SaaS systems minus a single bill. You end up spending so much time dealing with the friction of tools, even with a single cloud provider, instead of adding value. Their response was, yeah, no one tells you how fragmented those cloud provider tools are within their own cloud. It's such a huge misconception and a hard truth most people don't know. We spend so much time and resources instead of adding value. I replied, I know it sounds like black magic, but our connected toolchain is a single secure model that works natively across the entire suite of 50 applications. The focus is on building valuable things, not IT integrations with a single cloud. Let us show you in Palantir Bootcamp how real it is. This looks like this was a good sales call for Chad. Chad is not a sales guy at Palantir, but he's basically, closing big deals. Given he's high up there in the company. This conversation mirrors many stories I hear from IT practitioners who are tired of the disconnected and fragmented tool chains provided by cloud providers. The non-differentiated heavy lifting they were supposed to remove often just got moved from the data center to the cloud with a nice makeup. I feel generative AI has added an extra layer of opacity to this, and there is so much noise and so hard for companies bombarded by the next generative AI product that it's hard to filter what is signal in such a fast-changing space. Value is only created when you get to production with operational use cases. We have been doing this for 20 years with Gotham and Foundry. Now we will do this with AI in a safe, scalable way with AIP. See, here's my thing. If you're a hedge fund manager and you read one of the chief architects at Palantir, who's not a sales guy, having this type of a sales call with a $100 billion company, I mean, you start to think maybe Palantir is operating something that is fundamentally fucking differentiated and that we need to take a deeper look at the company. We just need to. Tesla 268, Palantir, wow. Palantir's about to go green. Oh my God, Palantir's about to go green. 2838. And again, I could be wrong here, and this is retail FOMO, but a bounce like this in combination with the things Chad is saying, I mean, when Chad talks to a $100 billion company like that, and they're like, yeah, let's take a boot camp because this guy actually explained to us how we could manage our data and our IT infrastructure in a way that's not as fragmented as what AWS, GCP, or Azure are offering us. And then, that conversation goes to a variety of different investors that are in that same ecosystem, and they start taking a look at Palantir more seriously as an investment. You just maybe start to get institutional money flowing in, not just retail. Tesla right here, 268. And maybe that's what's keeping Palantir on this bounce that we're seeing right here. Not bad, man. Not bad at all. You're saying look at QS. What's QS today? QuantumScape. That's up 24%. I don't know why that's up. I do know people were excited about that last week as well. But yeah, QuantumScape Corp. If you're in that one, I have no idea what they do. I don't know if they're like a quantum computing research firm or something. But they are up 24% on the day. Tesla trying to make a run at 270. I think it could happen, dude. It's going to be hard. There's a lot of shares at 269, but it seems like there's a shot that could happen. Kramer also did say Tesla's going to $1 trillion. So yes, Kramer is bearish on Palantir, which is great, but he did say Tesla's going to $1 trillion yesterday, which might hurt Tesla from going to $1 trillion. But at $270, which is all we're asking for today, it wouldn't go to $1 trillion. So let's see if we can get to 270. Let's see if that can happen. QS signed a deal with Volkswagen. Is that what happened today? It's a battery company. Oh, wow. Interesting. All right. I'll do some more research on them. Not bad. I mean, we saw Novix had a hell of a day or hell of a month with their batteries. Novix right here, 1787. There's a Robinhood account that I responded to yesterday, and they shared a screenshot of their portfolio. They have 40,000 shares at like $8. And so they're up like 300 grand just on Enovix. They're like all in on Enovix, which is pretty incredible, dude. Sometimes solidification really beats diversification, but you got to be right. And when Enovix was at $7, it was very risky. I still think it's very risky, but it's obviously outperformed. And the deals they got with Samsung and Apple, which it's not really Apple, but I think it's Apple. It's not reported officially to be Apple. That is obviously helping the stock a lot. Woody trades BTW 4,000 shares at a $15 average, holding for 2 years on what, Palantir? Okay, so what do you think for the super chat? He says, when things calm down, curious your thoughts on the impact of lower interest rates on Palantir's revenue. Probably not a concern, but is a negative pressure. Well, the thing about Palantir and lower interest rates is that interest rates really haven't affected them from a company perspective because they don't have any debt. It has affected the economic macro environment. Like, it's hard for Palantir to go to a company that's trying to sign, forget a 7-figure deal, a 6-figure deal, but interest rates are high and the company, the cost of capital and their debt is increasing. So they might not be able to pay Palantir $500,000 for their software if interest rates are high. If interest rates go down, that same company can start to pay more money to Palantir. Bigger companies maybe are able to allocate more money because obviously interest rates going down helps their company, helps their stock price. So they have more disposable cash they can deploy against software. So interest rates coming down, I think, helps the broader ecosystem of Palantir's growth. Now, in terms of net interest revenue, Palantir has basically $3 billion collecting 5.5%. That's going to go away, but that is not the bull case for Palantir, the treasury income. That is just a way for them to get GAAP profitable. The bull case is those adjusted operating margins get to 40% and they grow top line revenue, which means the bottom line, the net income goes higher, earnings per share, without needing to rely on T-bills. So even if interest rates come down, I don't think that's going to be a big deal. And also, they're only going to come down by 25, 50 basis points. So Palantir could still collect 4%, even if it's not 5.5%, which will be good for them. But overall, increased business activity should be the most important thing for Palantir. Tesla's 270. Oh boy, did we get it? 269. It's trying to touch it, not 270 yet. 40 cents away from 270. 40 cents away from 270. 40 cents away. Amit, can you check out 2 startup companies, Notion and the Underdog? I don't know Underdog, but I know Notion. Notion's a great company. Notion's awesome. But they're not public. And I don't think they're close to going public anytime soon. I think those guys are in Series B of financing. I don't know. I think Notion might be a unicorn. Oh, wow. Look at Tesla. Tesla might break 270. There you go. Tesla touched it. Wow. It touched 270.16, came back down. Wow. Tesla 270. Oh, my God. Someone just bought 100,000 shares at 269 and they got it over the edge. Oh my God. Oh my God. This is incredible. This is incredible. This is absolutely incredible. Wow. It just bounced right down from 270, but it's at 269. Yeah. In terms of that startups, Notion, I don't, I know about Notion. I don't know about Underdog, but I think Notion is going to take some time before they go public. They're not competitors to Palantir, to my understanding. Notion is like a project management application. So I don't think they're competitors to Palantir. But it might be a different Notion you're talking about. Tesla right here at 269.84, looking like it's going to crack 270, man. Looking like it's going to really crack 270. Chris says, I think he's asking because Palantir gets a lot of revenue from its cash on the balance sheet. No, I don't think that's true. Palantir gets a lot of net income from the cash on their balance sheet, but not a lot of the revenue. The revenue is not because of the cash on the balance sheet. But the net income, yes, the GAAP profitability is because of the cash on the balance sheet. That's why adjusted operating margins have to go up. Margins have to go up so that the revenue from the business itself goes down to the bottom line versus the revenue from the T-bills going down to the bottom line, which is the majority of the net income right now. But in a lower interest rate environment, that's technically what should happen as growth increases. And so hopefully that plays out for Palantir. Okay, Tesla keeps bouncing at 270. It touches them. There's too many red candles. Too many people are selling at 270, but it looks like the momentum's there. 269.87 on Tesla, getting a little bit of a red candle right now. And Palantir's still holding 28.33. I mean, goodness, dude, it's still holding 28 and the mid 28s at 28.30, not really falling down to that 27.90 range. Shamin says, FYI, I hated Notion when I used it at a digital marketing agency. A lot of people love Notion. I've used it before. I don't use it every day, but they're not a competitor to Palantir. So it's interesting that someone mentioned Notion in the context of Palantir. Notion is like a totally different company. They're not a, I mean, I guess I could say, like, there's some version where an enterprise might use Notion to manage some stuff over Palantir, but there's no, it's like, it's not an integrated ecosystem of your data contextualized through an ontology. Like that, Notion's totally different. But yeah, I don't use Notion that much. Timothy says, who for real would have thought Tesla would hit 270 given it was 200 2 weeks ago? Yeah, dude, if I told you, I mean, if you sold those damn covered calls at 220, 230, 240, 250, like, yeah, it would have been, you would have been underwater. Now, granted, Tesla could still fall back, but like the trend seems to be in the direction that Tesla wants to go up. It seems like Tesla wants 300. Look at that, 270. Now it's breaking out. Now it's holding 270. Goodness gracious, dude, $270 on Tesla. I mean, this is just unprecedented, dude. It was 164 on June 11th, and it was 138 in May. Everything has changed for Tesla. Everything has changed for Tesla. I saw someone who posted they had a $220 calls expiring this Friday, but they bought them when Tesla was at like, I think 190, and they're up like 300% or something. So I mean, this is making a lot of money for the call buyers. If you got bullish and you bet big, and then this is if it ends green today, this will be the 9th green day in a row for Tesla, which has not happened in a long time. It has just not happened in a long time for Tesla. Let's see what we got going on CNBC. Let's see if they're talking at all about Tesla. No, they're talking about CPI. They're talking about Delta. So no coverage on Tesla yet. I think the entire street is a bit confused on how this is playing out. But it is happening, which is exciting. Let me look at oil prices as well. Let me take a look at that. Tesla used to go on 27-day runs. Yeah, it used to. Wow, now it's really breaking 270. That was back in 2019. I mean, that's when the stock was 15xing over the course of 10 months. But since then, it's not had the same momentum, but it's acting like it's Tesla Volt 270. Wow, bro. Wow. Robinhood 2290, not bad. We got to see Robinhood try to break above 23. And Bitcoin going up would help that happen today, up 2.5% on Robinhood. So nice to see that on Robinhood. Also, the broader market's going up, and obviously the broader market going up means more trading revenue for Robinhood. Also, Bank of America put out a note yesterday on Robinhood, and they said they're going to beat EPS really good in Q2. They basically said the costs are under control. Robinhood's organic growth is incredible, and we expect a pretty decent EPS beat in Q2. If we get that, probably going to get some upgrades, and hopefully the stock closer to $25 when that happens. And so we'll see. We'll see what happens. Look at Tesla, 270.3. 270.3 on Tesla. How many shares do we need to buy for 280? Let's see on 280. We're getting so greedy, dude. Let's fucking see. 270. The wall at 280. Okay, so there's 200,000 shares at 274. So you got to get past 274 first. And then at 280, there's 490,114 shares. So 280 is going to be a little tough today. 280 is going to be a little tough. But the fact that we got 270 is pretty damn incredible. Enphase, wow, Enphase 115, lower CPI, likely rate cuts. Solar's going to benefit. Whoever got the solar dip at 97, it looks like that was a good dip. It really came down to, did you believe in JP Morgan's report? And I didn't read it, so I had no idea. But if you were a big Enphase bull and you thought the report was bullshit, as CPI comes down, you are probably up on your Enphase if you bought that dip. Robinhood 2286, Tesla 270 pounds. You're still holding $28. SoFi 682. PayPal actually up today 3% at 60. Why are the cruise lines down? I'm curious. They shouldn't be down today, given that rates potentially look like they're coming down. So that is weird. That might be a dip buying opportunity if they're down for a dumb reason, but they are down. Maybe the hurricane is getting a little bit more excessive if that's the reason. By the way, is anyone living in that Texas area where the hurricane happened? I know Roy Crossroads, he's a friend of the channel. He He lost power. I don't think he's. I think he's lost power for the past couple of days. So let me. Is that in the Houston area? I don't know exactly where the hurricane happened. I don't think it's in. No, it's in Houston, right? Yeah, it's in Houston. Yeah, it was in Houston. Millions of people still lost power in Houston. Yeah, see, that's tough. That's not good. And maybe potentially that is a tailwind or a headwind on the cruise lines in some capacity. But again, the numbers that we saw from CCL and the surprise profit were incredible, which is why it's up from $14. So if that's not a headwind, then we should see that continue to do well. I'm in Houston. There's people going on day 4 without power. Wow. Dude, the last time I experienced something like that was Hurricane Sandy in New Jersey. People on the East Coast, they might remember what I'm talking about here. But Hurricane Sandy, that one, yeah, I think we had no power for like 2 days or something. If I had to go 4 days without the internet, I don't know what I would do to myself, dude. If I had to go even 4 hours without the internet, forget power. I can't. As long as I have the internet. If I have to be in a Starbucks, I have to live at a Starbucks for 4 days. I don't care. I need the internet. I cannot live without the internet. I just don't care. Like, I'm the happiest when I'm on my phone and I'm on the internet and I'm on Twitter and I'm on YouTube and I'm doing my thing. Like, if I went to a beach, dude, I don't want to be on the beach reading a book. I want to be on my phone. All right. Like, so if I had no power, dude, I don't know what I would do. I would freak out. I would literally freak out. I need the internet. Mark says your palms would regrow hair again. Amid having to go to pee without the internet is already a deranged amid. Yeah, dude. I mean, it did. Yeah, like in the morning, I went to pee. I had one hand on my urinator and I had another hand on my phone and I was scrolling. Like, it's maximizing efficiency. If I had no power, I don't know what I would do. Wow, Palantir. Palantir's about to go green. Wow, we just went green. We just went green on Palantir. Oh my God. 28.41. We are 1 cent away from officially being green on the day. There you go. We're green. 28.43. We're green, folks. We're freaking green. We are green. Goodness gracious. We are green. Z Sama says, why go to the beach then? I agree. I don't like going to the beach. I hate going to the beach. Last time I went to the beach was 3 years ago. My mom always wants to, like, because we live in New Jersey, so like Atlantic City and all that stuff. She's like, hey, why don't we take a trip to the beach? Why? What am I going to do on the beach? Last time I was on the beach, I got the freaking, what did I get? I got the funnel cake, and the seagulls literally attacked me and they took my funnel cake. So it's not fun being on the beach, okay? Not good connection on the internet. And then the seagulls will literally take your $20 funnel cake because the boardwalk is overpriced food. So I hate the beach, quite frankly. I don't enjoy the beach at all. The beach is not exciting. Robin at 22.95. Palantir just had a red candle at 28.46, but we did go green. And then Tesla nicely making its way above 270. Nicely making its way above 270 Dolores. Oh my God. John says, I have a kid with autism. Losing power is a major problem. Yeah, dude, losing power is tough, man. I remember in 2013, I was playing cards with like my family. That's how we were passing the time. Okay, so there's one activity I could do if I didn't have power that I could do for probably 10 hours. Does anyone want to guess? I'm afraid to see what the comments are. Does anyone want to guess what is one activity I could do for 10 hours, even if I don't have power, that I would be willing to do? Don't say anything crazy, dude. I already know what some of the comments are going to be like, but I want to see if anyone can guess. 269.40 on Tesla. All right, so Tesla got a big red candle right there. That's a nasty red candle. Let's see if we can recover from that. Palantir is still 28.37. Let's see. People are saying you don't even have to say it. Comb your hair. Guys, the crazy hair is how things happen. And usually I wear a hat, so you guys are getting to see my hair just be crazy today. You know, I don't even shampoo my hair that much. I shampoo like once a month. Like, people think they need to shampoo every other day. Like, shampoo is actually not like, I don't think it's bad for your hair, but my hair has never needed a massive amount of shampoo just for it to be luscious. I'm not saying my hair is luscious, but like that's what it looks like sometimes. My hair just naturally, it does its thing. I'm going to enjoy the next 20 years of my hair because I know my dad started losing hair at like 45. So I've got a good 20 years and then this thing is down the drain. But But for now, it's okay. PayPal at $60, JP Morgan at 206, Robin at 22.94, Tesla at 270, Tesla right back to 270, and then Palantir 28.30. Okay, so what I can do for hours, someone said greasy. Yeah, it's not luscious, it's greasy. That's Mick got critters in there. I did have lice when I was little, dude. When I was like 8 years old, we went to India, and then we came back, and I was like, Mom, like my it's so itchy. And then she was like, oh my God, you have lice. And so you have to work for a good 4 or 5 months to, like, when you have lice, bro, when you have little fucking ants running around in your head, like, that's not cool, dude. That's like, is disgusting, quite frankly. So when I go to India this time, I have to make sure I don't get any lice. But what I can do for hours, even if I don't have the internet, someone's asleep. I can play chess. If you give me someone who's decent at chess and we have a chessboard for 10 hours, I will play chess. I love chess. So that is the one thing that would distract me from not having access to Twitter is chess, because I really do love playing chess. But if we don't have a chessboard, dude, and we don't have Twitter, I would go crazy, dude. I need the internet. Otherwise, I would go crazy. Thomas says, I'll whoop your ass in chess. I'm pretty sure a lot of you guys are better than me. But I really like chess. Chris said, draw pictures of Alex Karp. Wow. That's rude. That's rude. I suck at drawing, by the way. My mom is great at drawing. My mom is actually, I got to show you guys her paintings one day. She's like she's like an artist, bro. Like my mom we have paintings in our house from my mom that she used to paint back in the 90s. She tried to get me into drawing, but I sucked at it. Because I have no artistic talent outside of talking. That's what I can do. All right, let's get to CMC, see what they're saying about CPI, and then we'll keep going from there.
RPM Speedway, you don't know them? No, I don't. I know they're excellent, and I don't mind them. I don't think this is Standard Oil where they have 100% of the market and they take oil.
No, but do you listen to yourself? Because at the beginning of the show, you were talking about the incredible power of them and how they can do anything they want and buy anything they want. And everybody's afraid.
Here are 3 big movers we're watching. Pfizer is moving higher this morning after the company announced plans to proceed with a once-daily version of its weight loss pill, following what it says is encouraging data in early-stage trials. Shares of Delta tumbling, dragging other airlines lower as well, following its weaker numbers and guidance. More on that one later this hour. And then Pepsi's also under pressure, missing Wall Street's estimates for second quarter organic revenue following weaker demand. We've got more color from the CEO, who I just spoke to, coming up later this hour. But guys, we've got to talk about this inflation number. It was very good for investors, for the Federal Reserve. You know who was most happy about it, probably? The Japanese. If you look at what happened intraday to the dollar yen, it was just falling like a stone. Why? Because crazy move. I mean, some people are even wondering if they intervened because it's such a huge move, a 2% move
for a currency. Wow.
For a currency. It's a wow move. But also, this was a trade that had gone all the way up for a really long time. So now that there's more definitive proof that the Fed is going to cut rates, which came in this morning's CPI number, the dollar sold off. And you're seeing it against the pound, too. It's a really sharp move there. So what did we learn? We got a negative number, as we've been talking about, on that monthly number, negative 0.1% inflation, overall headline in the month of June from May. That was the lowest since May 2020, so onset of the pandemic. Haven't seen a number like that. So overall, it's 3% on the year. Remember, the Fed wants to get to 2%, but 3% is definitely a step forward and the lowest it's been in years.
Core CPI 2.2% over the last 3 months.
Core CPI, and that's arguably more important because it strips out food and energy, which is more volatile. You're looking at the 3-month blended number. That's
me. I'm looking at the 3-month blended.
Yeah, no, it's good. It's good to look at the average. I should say, not blended, average.
Got it.
But the core numbers were better too. They 0.1% on the core was way more benign than what was expected. It's more benign than what we had been seeing in the early part of this year when there were worries. Look at the trend there. So that is pretty good. And if you look inside and what's part of that, I stripped it out into some of the key sort of culprits that we've been seeing as far as inflationary pressures recently, about where the inflation is coming from and where the relief is coming from now. Used cars, for instance, we knew that was going to be a drag. That turned out to be a drag. The new cars also, definitely a drag. Food at home, 0.1% increase on the month. That's good. Grocery inflation is coming down. People will likely be happy with that. Food away from home is still pretty elevated. So at the restaurants, that's still been an issue. Energy subtracts 2% on the month. So that was a big factor with oil prices down. And then I mentioned the cars, which was a part of it. You know, you can get very granular in the CPI data, which, you know, I love.
So CPI came in the right way. They're just talking about the things going on with energy and shelter and used cars. SoFi right here at 688. SoFi's up 5%. SoFi 693 at one point. And again, that CPI data that she's talking about, one of the core elements of it was that the energy decreases, particularly natural gas, actually offset the shelter increases, as she was talking about, which is what we need for the Fed to be able to say, hey, there is substantial declines in certain parts of CPI. And if we think we're lagging a bit on shelter, which J Powell's kind of admitted, then once shelter comes down, in the words of Tom Lee, inflation will fall like a rock. That is why SoFi's up 5%. Because Noto said we need a rate cut. You get a rate cut if you get good inflation numbers. Good inflation numbers means rate cut's probably happening. SoFi right here at 692. And so that's why it seems like the market's pretty excited for what could happen in the context of SoFi. Not bad. Not bad at all. Oh, where's Broadcom? Is that one up today? The one that Nancy bought? That one is down 1.7%. Yeah, a lot of these, they also ran up a lot in the past couple of weeks. So they're going to take a little breather. Broadcom is up almost 35% in the past month. So I expect that one to take a breather. Palantir is struggling to stay 28. Tesla completely got rejected at 271, right back down to 268. So there were just too many sellers at 270. Palantir at 2840 got rejected as well. Now back to 2808. Nike's up 1.65%. Robin at 2265. DJT 2961. Bumble's up a little bit, 2.8%. Shopify 65. Spotify 304. Bank of America is actually up a little bit. That's good. Bank of America has had a pretty good year. They increased their dividend. And then Tesla right here at 268 on the day. Where's NVIDIA? NVIDIA 130. Wow, NVIDIA taking a dip. NVIDIA's down from 136. Okay, now where's IWM? IWM is green. Maybe some of that money left NVIDIA and fueled into IWM. Not bad, not bad. And I mean, that's not horrible. We need to see a little bit of a rotation. I would be fine if NVIDIA goes back to 105 and IWM goes to 280. I would like that over NVIDIA going to 170 and IWM being at 220. Like what would you guys rather? Would you rather have NVIDIA at 100, which is a pretty decent dip from this 130 range, but IWM at 280, 270, or IWM at 220 and NVIDIA at 170? I kind of want the first one because the first one to me feels like a better opportunity for the market to broaden versus the second one just over, it just stuffs a ton of money into NVIDIA, and then NVIDIA has even higher expectations to be able to get to. So I would rather the first one. I'd rather have that news anchor bank. Dude, you guys say I'm a simp? You guys are simps. Goodness gracious, dude. Look, I like Sarah. She's awesome. But you guys are simps. Oh my God. I want to meet Sarah one day. The other one, Morgan, she followed me on Twitter a couple weeks ago. And I want to do a segment on Palantir with CNBC one day. So I gotta find a way to reach out to them. Because I mean, they've had Sawyer Merritt on to talk about Tesla. They've done segments with retail investors before. So we got to find a way to get me on CNBC so I can pump up Palantir. One of these days, we'll see. We'll see if this can happen. Amid Tom Lee sitting somewhere with that "I told you so" smile on his face. Yeah, I would imagine. Tom Lee. I mean, he even predicted CPI yesterday. He was more bullish than the street in terms of he thought we would come in at 0.2%, and he was right. So Tom Lee's just been right this whole year, man. He's really, and it's not just guessing. I mean, he just looks at data, and it's data that I guess the other guys don't want to look at. And it's so funny because Liz Young, who's been so bearish, she looks at a lot of data as well. But I guess Tom Lee's approach to looking at data is where does it fit in a broader narrative? And Liz Young looks at it as historically, if X happens, then Y should happen. And the thing is, this year and last year has been against history in some respects, right? Other respects, it has been historical and matched trends in history. But in a lot of ways, history has never printed this much money and raised interest rates this quick and had to deal with it. And that's why we had some anomalies this year. What else do we have? Amit, I work in PR. I might be able to help you. All right, dude, get me in CNBC. Whoever can get me there. That would be fun to happen. All right, so Tesla's now dipping 265. Palantir, we dipped. Palantir 27.94. It's going to be tough to hold 28 today. Let's see. We got 5-6 hours left of the trading day. We'll see if we can rebound back to 28. Is the broader market dipping? S&P? Yeah, we're taking a dip. Look, so this feels healthy to me. Although the CPI number was great, it was pretty obvious. I mean, anyone with a brain could tell yesterday was front running the CPI. I don't want to say the CPI was leaked, but essentially the CPI was leaked. And so if yesterday we didn't move to 28 on Palantir or to 559 on the S&P, and today we got the CPI numbers, we probably would have got all the way higher into those levels and maybe maintained it. But because that happened yesterday, taking a little breather. I think that's fair. I actually think that's really healthy, quite frankly. But it would have been fun to see the momentum keep going. Obviously it would have been really fun to see it happen. But we'll see. We'll see if that can continue going on to the trading day. Amit, what do you think is the absolute low for Palantir? I think 11 to 12 might be off the table due to behavior, and maybe also 15 to 16. But what about 19 to 20? Yeah, I think 20 is the low. I don't think we get below 20 unless the entire market collapses. But I think 20 is the low. If we get a crappy earnings and management doesn't raise guidance and all the different bear cases play out, I think 20 is the lowest we see. Now, could we see the 15, 16 range again? Yeah, I think there's too many dip buyers at 20 and 21 and 22 and quite frankly, even at 23. So I think trying to get Palantir below 20 is tough. Trying to get Palantir below 15 is very tough. But in the 22, 23 range, I think is very possible if earnings just doesn't go that well. So I think it's in a good spot. And by the way, if it falls to 22, it's still up 40% year to date, which is incredible, right? Like a dip down 20%, 25% from here still gets you up 35 to 40% because of the year it's had. So now it's just a question of, where is the low on the dip? Okay, Chris said, give him a call. So let's call Chris. Let's get some thoughts from Christopher Patel on the broader global capital equity markets. Chris Patel, you are on the Market Open. How are you doing?
Good, man. I am kind of curious as to everything that's happening. Well, here's what I'm interpreting. If you look at like Google, Microsoft, Amazon, they've been the market leaders, taking us higher and higher. So, though that was the risk off trade. Companies that are making tons of cash flow, they're not dependent on any debt. What you're seeing now is kind of a rotation into the small caps and mid caps, right? So one of the biggest beneficiaries right now, of course, is companies that have yield on them. So a lot of REITs are catching tremendous bids right now, and so a lot of them are up almost at 5-6%. So I think this is a healthy rotation.
Do you officially? So we've seen days like this where the large caps take a break and small caps get momentum, and then like a day later or even an hour later, that's invalidated. What do you think you saw in the CPI report to actually say IWM will go up and Nvidia will go down?
I think it's a couple of things. The valuations on the large caps and the mega caps has gotten beyond frothy, right? I mean, you're basically right now, if you're buying Google, Microsoft, Amazon, whatever, you're paying substantially higher prices than the valuation normally trend at. So if you look at like how these companies usually perform on a PE basis, all of them are trading at relatively high levels, right? I mean, these are great companies, don't get me wrong, but you're basically paying 2025 and 2026 level prices today. Normally that's okay because, those are actually the safe names to be in. But now with interest rates coming down, people are like, okay, I need to be in things that are more value-based. But I think more important than that, people are looking for yield. And if they think that in the future, yield is going to be lower, either on the 10-year, they're going to be chasing a lot of these companies that can provide cash flow. So I think right now the rally is just broadening out. My biggest conviction right now would probably be if CPI keeps coming down, we're definitely going to see a rally kind of broaden out, and the S&P 500 might end up being somewhat flat. because the S&P 500 is so exposed to the mega caps at the top that it's kind of like a what is that thing called? Like a net. So basically, small caps and mid caps will run higher. Large caps and mega caps will kind of like stay a little bit flat and maybe even go down slightly, just to account for that rotation from large and mega cap into the smaller guys. You know, I would personally in this market be buying, like I already have positions on a lot of these REITs, but also on preferred equity in some of these companies that have tremendous like double-digit yields, which literally it's a money printing machine.
So your argument is that as interest rates come down, people are going to be chasing yield. So my question for you here, and I know you said valuations are frothy on mega cap tech. What gets someone who's leaving the money market fund who wants to get more yield to pick like a Verizon over an Nvidia? What do you think their mindset is when they make that decision?
A combination of two things. One, safety, right? So Nvidia right now, you know, it's still a cyclical business. I know a lot of people are uber bullish on Nvidia, which is good. It's a great company. It's generating a lot of cash flow right now. But historically, semiconductors have had moments where they've gotten all the way to the top and then they've come down significantly. You know, and when it comes to people, especially people who are, you know, retired or semi-retired, they need security more than they need like price appreciation on capital. Right. So the key right now is, and this is something I spoke about Matt yesterday on the Cash Flow Chronicles. You know, there's the whole quote that I keep hearing is, oh, there's $6 trillion sitting on the sidelines that's just waiting to enter the market when interest rates start coming down. And the thing is, yes, that's true. But number one, 3 trillion of that is pretty much just liquidity needs that people are going to have. So
yeah, that's never leaving. There's at least 3 trillion that's never leaving. Yeah.
Right. The other 3.5 trillion that you have, it might end up in the treasury markets and in yielding instruments. And the reason is because a lot of that money is looking for that higher yield. Right now, in a money market account, you can get 5.5%. If you go to a 10-year, you can only get like 4.13, right? So now what you're seeing is a lot of people are saying, well, look, if in the future rates cuts are coming, I mean, money market is going to not pay as much. If you go back and you look at money markets historically, the yield on those are like barely anything versus the treasuries, which are going to rally. So a lot of people are rotating into treasuries, rotating into, if you look at the REITs, if you look at some of the other things like cell phone towers, like AMT, CCI, they're up to like 3-4% today. So I think we're just seeing this rally kind of broadening out. I do want to just comment on the cruise line.
Yeah. Is it attached to Delta's numbers or what's happening here?
Yes. So Delta, because of their weaker outlook, they're basically kind of like, it's almost like an adjacent industry. So they're saying, oh, maybe demand for travel is not that high. So people are like, oh, well, maybe that means that people are not flying to cruise destinations. So maybe cruises are also going to be weak.
But hold on. I think that narrative is absolute bullshit. Like,
I agree, but that's not how the market sometimes takes it, right?
But that narrative, we know that narrative doesn't make sense from a lot of points of data. Like that's
I know. Well, that's how the market translates it. The one thing that I think the Delta people said today was that there's a lot of competition in the airline space again, and maybe that's what's causing the thing. Because, you know, travel is back to being normal again, in my opinion. But airlines always are kind of elastic with the amount of demand that's out there. When it comes to travel, because sometimes what happens is there's a lot of flights and then, you know, they kind of have to dial it back, and sometimes there's fuel costs and all this other stuff. So I'm not the biggest fan of airlines, but I am a big fan of the cruise lines. So the cruise lines have a lot of levers that they can pull in order to, you know, stay profitable. But more importantly, cruise lines don't have the amount of elastic, what is that thing called? Elastic capacity. So you have to order a ship 4 or 5 years ahead of time. And right now with airlines, they order these planes way ahead of time, but then they're also like always rotating them in and out. So I personally, like I said, I'm still long on the cruise lines. I think a lot of them are going to benefit tremendously from the debt, from the debt perspective, because a lot of them took on a lot of debt during COVID and their cash flows have returned, but a lot of that cash flow benefit is going towards paying down interest. So right now the interest is killing their net income. But if interest rates come down, that's going to mean that there's the net interest the net interest that they're gonna have to pay on that debt is going to decline, which means more of that money is going to go into the net income side, in which case now they can use that additional cash to delever their balance sheet, which means that for equity holders, that means that, equity holders will benefit disproportionately.
Let me ask you this question as well. So Delta says, hey, there's increased competition in airline fares because like Southwest, United, they're all cutthroat about margins. But we know that people are traveling a lot. Like we have a ton of data on that. Isn't that bullish for cruises? Because if Delta has to lower their prices to compete with United, that's because there's so much demand that like they have to fight with each other. That sucks for them, but that means people are traveling and they're probably traveling to go on a cruise.
Yeah, that would be my interpretation of it, So I'd say cruise lines are the place to be, man. If anything, it probably supports people going on cruises.
Exactly.
Because now, if you live in the interior part of the United States, I mean, you got to fly to a port, right? Which means if the airfares are lower, hell, that means, hey, I could go on a cruise,
I agree. And CPI showed us that airline prices are down 5% month over month. I think that's bullish for that. I think this dip doesn't make a lot of sense then. That's decent.
Yeah. And we're going to see like one of the catalysts that, me, when you were doing the segment with Jason from Paper Gains, when he was doing his charting, you guys were asking like, well, what are some of the catalysts for the cruise lines? And I think a couple of the main catalysts that are coming up are, one, you're going to see numbers come out for Norwegian next month because the way that the earnings are structured, Carnival reported in June, and Royal Caribbean and all these other guys, they report a little later. So what you're going to see is, number one, Norwegian is going to be able to kind of like give us an idea of what's going on. And if they do a beat and raise like the other guys have over this year, it's going to bring a lot of sympathy to the other players in that same sector. And you're going to see them rise as well. So the catalyst is actually Norwegian's earnings that's coming up. And one of the great things is these guys have demand that's like getting booked up into 2025 right now.
Right.
And they're doing it at a higher margin than they were now. So that is the level of demand that's out there for cruises, where people are booking 1 year, even 2 years ahead of time. And I'm actually tracking the capacity. Dude, it's crazy how far out you have to book to get like a decent balcony room in a place, going to a certain destination. So,
and you talked about Starlink as a catalyst for them as well, because
dude, that is one of the biggest hidden jewels of this market when it comes to cruise lines. Cruising has a lot of unique benefits. But one of the biggest challenges was you were completely disconnected with horrible internet when you were on the sea. With Starlink, it's not the best internet. You're not going to get like, the same levels of bandwidth that you would be if you were sitting in front of a computer at home with a fiber optic connection, but it's good enough to the point where you can actually do work and actually do live stream. Let's say right now you're doing a live stream. You could probably do it from a cruise ship using Starlink.
You think so? You think I could do a decent live stream using Starlink?
You should test it out. That could be one of your
dude, if I'm on a cruise and I don't have Wi-Fi, I'm jumping off that fucking cruise.
Nah, you'll have Wi-Fi, but here's the more important thing. The cruise lines are adding a ton of revenue from that, because everyone on the internet, just like you, they're paying about $20-$30 a day just to be on the cruise line internet, right?
Dude, if you give me high fast internet, I'll pay $100 a day if it's really good. Like,
and there's if you look at someone like Royal Caribbean has like 6,000 people sometimes on one of these ships, and they're paying $20 a day. Norwegian, what is that thing called? Carnival, all these guys now, that is a huge additional revenue source that they didn't have in 2019. Yes, people bought the internet, but there was like some slow ass internet that no one really cared for. So not a lot of people got it. Now, dude, anyone who gets on a cruise ship right now, they're getting the internet that's on the cruise ship. And like I said, it's like $20-$30 a day. You're captivated. You can't really, you're a captivated consumer. So you have to be on there. So now you're adding to the overall net margin of the cruise line. And here's the funny thing. It's all high margin revenue, right? Some of it is, of course, going to be shared with Starlink for providing the service. But for the most part, dude, all that money is just going right into their pockets. Imagine right now you're paying $20 a day and it's costing you barely maybe $10, $15 that you have to pay to Starlink. So that means they're getting 50% margin on a 5,000-6,000 passengers that are on that ship, and you multiply that over a long period of time, like over a year, dude. Like I said, this is a money making operation, and these companies are going to come back with a tremendous amount of margin from the return of the consumer, but then also now it's going to open up cruising as a feature for a lot more people, because now you could theoretically do your job from a cruise ship.
Yeah, that's true.
Yeah,
that's a decent bull case. No, I think it makes a lot of sense. So you think Carnival $35? That's where you think it could go to?
I mean, in the short to medium term, absolutely. I personally, I'm gonna be honest, I have my spreads on. I am happy with them. They've done really well. But I'm holding them, and then even when the time comes for me to shift over, I'm going to buy the stock. I think this is a sector that's in the next 4 or 5 years should produce enough earnings to the point where it can 3 to 4x and return back to its normal ranges again once they.
Because Carnival used to be closer to 50, right? Carnival used to be, yeah. So it's obviously the pandemic hurt them, and the bear case for these cruises is people just stop traveling. I mean, that's essentially the bear case. Pretty much. You've got the threat of another pandemic or something like that. But even that, I don't think the governments would ever shut down the economy like they did with what's that thing called? With COVID again, because of just the negative effects on society, that they realized that, hey, maybe this is not the way to do it. Instead, to just have a more a structured approach to dealing with pandemics. So I think they're pretty insulated against that, but it is a real possibility. I think the demographics are in line now. The interest rate environment is in line. There could be slight weakness on if the economy goes south, which means that you might not have as much forward demand for cruises, because it is technically speaking a discretionary item that people can cut off. No one has to go on a cruise in order to live, right? It's just a part of expenses. So that could be an expense that gets cut if we do get into a severe recession. But that doesn't seem to be the case right now. I think overall travel itself is still a place that you want to be long term. I think there's a lot of soft money on the sidelines from baby boomers retiring, looking to go explore places. And a lot of them can do it at the leisure of cruise lines more than they could of flying somewhere, trying to find a hotel room, find a place they can eat, blah, blah, blah. That's why a lot of people, especially in the older generation that are retired now, they freaking love cruises, man. Have you been on a cruise, by the way? I've been on a cruise with my family, and I was bored the whole time. So I don't.
Yeah. Well, now you have Starlink, and now you have the internet. So you can go and pee and be on your phone at the same time.
Dude, I just anything that takes me away from my element is air conditioning and Wi-Fi. I get annoyed at. But
dude,
maybe
if you're on a cruise ship, trust me, the air conditioning is not a problem. It's amazing. And if anything, we should do Junkies Con. Well, technically, I don't know if Finance Junkies Con is a brand anymore, but we should do a Finance Junkies trip on a cruise. Go on a cruise, even if it's a 3 or 4 day cruise, leaving out of, and believe it or not, New York. There's actually some cruise lines that leave out of New York. We can go on a 3-4 day vacation. And you can still do your morning life from the fucking cruise ship.
Do you think the consumer is weak? Because I'm looking at Costco. They raise the prices on memberships, but the bear argument is, well, people are shopping so much at Costco because they don't have money to spend at Target or whatever. But then you're telling me, well, people have discretionary money to go on these fucking cruises. Is the consumer weak or not right now?
So you have to segment the type of consumer out. We have kind of a weird situation in the economy where there's two different consumers. You've got the people who are at the top that have stocks, bonds, assets, real hard assets. They are doing extremely well. If you have stock right now, your portfolio is up 60-70%. Your price of your home over the last 5 years is up 50-60%. You're doing tremendously well. If you have a mortgage that's a sub-3 mortgage, you are doing well. This inflation has definitely impacted you slightly, but for the most part, you've got all the benefits of increased wages as well. The people that are really being hurt are the people who, number one, don't own any assets, right? So if you don't own your home and you've had to pay higher rents just to keep up, if you've had to pay for higher groceries and all the other stuff, and your income hasn't gone up nearly as much, and you don't own stock, you don't own bonds, you don't own any real assets, then yeah, the world is really a problem for you. People who have a lot of debt, they have an issue. A lot of a lot of people in the U.S., especially at the bottom half of the spectrum, they're hurting tremendously right now. So what's weird is you kind of have this rotation from, there's all these people that are traditionally, very reliant on things that like McDonald's and all the other stuff. They're suffering, while the people at the top who go to like steak dinner, you go to New York City right now, bro, the restaurants are packed at the high-end restaurants. But
yeah, I went to Peter Luger the other day. There was a lot of people there.
Right? Exactly. That's the key. Motherfucker, like, who's taking you to Peter Luger's?
Oh, it's the Palantir people. They took me there.
All right. Well, the point is, the people at the top are doing extremely well, and the people at the bottom are doing extremely bad. Now, how does that gap eventually get closed? I don't know. Whether that be structural reforms by the government, that's probably the most likely scenario, and that's why, like, the Biden administration is talking about possibly raising taxes. I mean, the Canadians already started doing it with capital gains taxes. So what's happening is right now there is like I said, there's a very big disconnect between the haves and the have-nots. And I'm not so sure society wants that to stay in that general,
vicinity.
Market dynamic.
This is a good point you bring up, dude, because I've never heard anyone on CNBC, and when I hear them talk about the consumer, you're saying, hey, there are rich people and poor people. And it's not just like there's always been rich people and poor people. You're saying, given the nature of this market, if you have equity ownership in either stocks, crypto, or real estate, this is not like you're not a weak consumer. You've done well. But if you are one of those consumers that's living paycheck to paycheck and you don't know about the stock market, you don't have any ownership in anything, then yeah, you're probably a consumer that like needs Biden to relieve your student loan debt, or you need, things from the government. And so the question then becomes, are there more consumers that are struggling than consumers that have done well from the stock market? And does that hurt the overall consumer, or is there enough people that own equity in something that is over determining the capacity for the consumer to ultimately be weak throughout the country?
I think historically speaking, the people at the very top are your older generation who had disposable income to be able to save that money. So those people are doing okay. I think it's the 20 to 30-year-olds that basically have been living paycheck to paycheck that are struggling the most right now. Like look at yourself, right? Like let's take like 3 different age groups. Look at Steve, look at me, and look at you. Steve, of course, is probably on the top range. Me and Steve aren't that old. I have to remember, Steve looks old, but he hasn't.
Steve's like 42. Yeah, Steve's young.
So, the older people, they're doing extremely well, right? Me, I've been saving. I've been putting money in my 401k.
You were texting me some apartments you were thinking of buying because you've done pretty well.
That's because in my 20s, I struggled like crazy. I worked my ass off, right? So I was able, but the thing is, when I was struggling, the economy wasn't that, it was actually pretty bad. It was 2008, 9, 10. Like, that is when I entered the labor force, okay? I still remember I had to go to like a bunch of interviews. Like, I felt like I had, even though I wasn't paid that much, I felt relieved that I got a job right after I got out of the army, because trust me, no one was hiring at the time. Like, people think right now, like, oh my God, the labor market is not that good in certain industries. Dude, if you started working in 2008, 2009, 2010, that was bad. That was really, really a bad time. So, but the good thing was inflation came down so rapidly because of how everything was with the recession, that the impacts didn't impact me as much. Right now, people are kind of like stuck in 2 different zones, where a lot of people have, number one, a ton of student loans, a student debt. They have a lot of credit card debt, and they've got the prospect of higher rents and all the other stuff. So it's just, I feel really bad for the 20-year-olds right now, because the people who are really getting screwed over are the people that are coming out of college right now and don't have a prospect for a good job. They have a degree that's completely useless in the market, and they're struggling. So if you see all these TikTok videos, like, I have 2 degrees in sociology and art history, and no one's giving me a job, and the only jobs I'm getting is like entry level, like data entry and secretarial jobs. It's like, what did you think you were going to get? So a lot of people have been fooled into thinking, if I go to college, I'm automatically going to get a 6-figure salary. And that's completely wrong. When you go to college, you got to pick a major, you got to pick a field.
Well, so Chris, is the resolution to this the more taxes, or is the resolution people learn about the stock market, or they get equity? Like, how does this because at the end of the day, the consumer can't be weak for us to have a good market. So how do you think this resolves?
I think this is where it's hard, because each side is always leaning on just making the other side look bad. The consensus should be moderate taxes so that, they're fair for everyone. So the higher end pays a little bit more in taxes, not like crazy amounts, like pay 90% of your money towards tax. Like, that's not going to work for the economy. But it also doesn't work if you're like constantly just turning people into debt slaves by taking away all the risk, and then having industries take advantage of them. Like, an example is the university system. The university system right now has no equity in your future. They're basically like, okay, come here, get your degree, get out, and whatever happens to you. We already got our money. Fuck you. It doesn't matter. And the government is basically subsidizing it. The government is saying, it doesn't matter which degree you get, we're going to subsidize you. And now you're basically churning out debt slaves that are going to be working for the rest of their lives, hoping that the government works and forgives your loans. Honestly, the answer should be market oriented, which is the government should not be providing student loans to people, or at least provide student loans in areas that make sense to provide them. And also, the government should be helping encourage trade schools and jobs that are actually necessary. Electrical engineers, HVAC techs, plumbers, builders. I mean, these are the kinds of things that you don't need years on a master's degree. You could do very easily with a 2-year degree where you learn all the skills that you need to make society better. But once again, that's like my solution for it. The government, they fucking hate each other too much to basically do anything right. And so I think eventually, I hate to say this, but the only way that we tend to learn is everything fucking collapses, and then each side figures things out, and then we get a figure like Obama that comes in and brings some logic into the mix. And then hopefully, like I said, hopefully someone who's smart enough to come into this presidency can basically tackle the parties and get something done that's actually worked for the country. But right now, I don't see that happening. I think this is going to sound fucked up, but I think overall in this world right now, things have become too easy for people, because anytime there's a bad scenario, the government just comes in and bails everyone out, whether that be big business or even the small guys. That I think right now, people have become too comfortable with that. And I hate to say this, but the only thing sometimes that fixes society is a little bit of discomfort, where they wake up and say, you know what? Maybe this is what I'm doing is actually kind of stupid, and the government's job isn't to just cover for my mistakes. Let a few people fail, let a few banks fail, let a few big companies fail. So, I
mean, even Jay Powell agreed. He said if we get banks that go under, then it is what it is, and that's just the consolidation that happens. Chris, last question for you, real quick. Palantir, $28. Is this stupid, or do you think we're heading to 30?
I don't know, man. I think it's going to go down. I just think it's overbought in the short term. So that's why I'm taking a bet on the market kind of correcting a little bit. So right now, the multiples on Palantir are at the top end of what I consider to be normal. Now, yes, the market can stay irrational longer than I can stay solvent, all that good stuff. But I think there's a pretty good chance that we get a September, October pullback. Oil prices right now are starting to rise. So we got a very bullish signal today. That could also just be the rug pull that's coming in the next few months. The same thing that happened last summer, if you remember, where we got uber bullish in June, July, and then August came and then rug pulled the market. And I think Palantir is going to be uniquely impacted by that rug pull. And in which case, like I said, the range that I have is pretty wide. All I need to make money is literally Palantir to be below $26.75. And with the current run it's not unusual for it to pull back 10, 20%. And if it does pull back 10, 20%, I'm already in the money, and now I can just chill. And bro, I'm taking the strategy that I'm using is believe it or not, a low risk, high reward strategy. That if it works in my favor, it's like Monish Pabraya says, if I lose small, but if I win big. Right. So.
All right. Thank you, Chris, for your thoughts. Chris's Twitter, I definitely recommend people follow him there. He also has a Patreon. If you guys want to subscribe to his Patreon, it's in the link of his Twitter right here. Just crossed 13,000 followers. So there we go on Twitter. Congrats on that.
I get more followers from being bearish on Palantir than I do being bullish on.
That's his growth strategy, guys. Like, you know what? Forget good analysis. I'll just tweet memes at the Palantir bot guys and they'll follow me. That's great.
See, the thing is now, all the people that have joined, they're like, I want to see him fucking fail. I want to see him go down. What they don't know is Chris Priscilla doesn't fucking fail. All right. Except to Adam Bergman. Adam Bergman, my arch nemesis. He's the only one that I've ever lost a real bet to.
Hey, you lost $2,000. The bet, for those that don't know, Chris said Snowflake would outperform Palantir last year, and
I was wrong, man. I was wrong. The Palantir people, they beat me, bro. They beat me.
I love it. Thanks, Chris. We always appreciate your thoughts. Means a lot. His Twitter is in the chat, and we'll talk to you later.
All right. Take care. Bye.
Take care. Okay, so I have another person that said they could call into the show that you guys would appreciate. Let me call them. Let's see if they pick up. Let's see if we get them to answer. And if they do, I think you guys are going to be interested to hear from them if they're able to pick up. So let's see. If not, maybe we call them in a couple minutes. They might just be a little busy. All right, folks. He picked up. We have someone that we've talked about a lot on this show. Now he's here, not literally in person, but through audio. Mr. Chad from Palantir. Chad, what's up? It's going very well. Let me put you on speaker. Okay, there you go. Now people can hear you. Okay. So, Chad, you've been a friend of the channel for a long time. People know about you in like this mysterious way, but you put out this tweet today that is making you less mysterious. And this tweet, not only is it doing well in the Twitter algorithm, but it's an incredible tweet. And it's about your kind of sales call with a company that's worth $100 billion that's thinking of Palantir. So before I get into this tweet itself, who are you? What do you do at Palantir? And I guess in general, why do you like working at Palantir?
So Chad Walquist, yeah, architect is my official title, but I do whatever needs to get done. And so, like, I think the biggest reason I came to Palantir was, I was a prior customer. I brought Palantir into Tyson Foods. I led all the Tyson Foods organization there around IT, analytics, that kind of stuff. And I saw the power firsthand of the value that I could add with the tooling. And the tooling was focused on outcomes, not IT focused of, hey, I can build a data lake. Well, what am I going to do with that? How do I add value? And so that was the original thesis I had. And then when kind of the Gen AI boom happened, I was actually working at Amazon on some generative AI components. And when I saw kind of how things were transforming, how my work was going, it became obvious to me that I needed ontology to actually really make this stuff work in a meaningful way in the enterprise space. And so that thesis became AIP. And that's why I joined Palantir, was to work on that, is how do we bring Gen AI functionality into the enterprise?
So this is really exciting. I've gotten to know you, and I credit as you're one of the reasons Arnie and I actually understand an ontology in depth, because you sat with us for 3 hours and kind of like forced us to understand what Palantir is actually offering here. And obviously that ontology is a differentiating moat for Palantir that we all believe is probably one of the reasons clients get excited about them. So in this tweet that we read about 30 minutes ago, I'm going to go through it again. You had an introductory call, basically a sales call with a $100 billion business. And their question was, how are you different from the Snowflakes, the Databricks of the world? So I guess can you answer that question for all of us that are probably wondering, why is Palantir different from some of those bigger companies? And in the context of selling Palantir to some of these clients, what are the things they're looking for to be answered to go with Palantir over a competitor?
Yeah. Well, this is the reason I put this tweet out this morning. This is a theme I see. It happened yesterday at a big potential customer, but this is a theme I hear across many IT practitioners. And I was an IT practitioner for 20 years, running the $50 billion organization, or $50 billion company's IT organization. And so, like, I know the pain firsthand at what it looks like. I went through the transformation from legacy systems to Hadoop to cloud-based. I've gone through that in my entire career. And so I see their pain. I actually didn't even have the time to really dive into the ontology in that call yesterday. I only had 30 minutes. And so I actually didn't even bring up the differentiator of the ontology to these people. I called it out. I kind of gave a high level what it was. But really, the real focus I started to pick up on when I was reading the room was they have the cloud. They have all these supposed best-in-class tools from these cloud provider tools, but they can't get value out of them.
Right.
They're spending all their time. And that's where I started to kind of hone in on things is you have to actually be focused not on the tools, but the value. And the tools should be friction to help you go add that value. And so
why aren't they getting value? Did they say why they can't make this operational for them?
Well, they just said, man, we're trying POCs everywhere. We're doing all the latest co-pilots and tools, and they named off 10 different AI companies and tools, and none of them work out. And they came back and said, and they said to me, this is kind of where I honed in on was, hey, actually, we're trying these chatbots, but it's really just a natural language filter on a report I already have. It doesn't help me. It's not transformational. Yeah, it's kind of nice. It's a natural way to do it, but it doesn't add value. And so those were the kind of keywords I started to hear is they tried the co-pilots, they tried all these things that are not actually getting value out of them. And so, all right, that's where I hone in on why? And they're okay, the co-pilot example here, but also the services. When you go to a cloud, everyone thinks you have all these services in one cloud and they all just work together. In reality, no. I mean, I work at Amazon. I can tell you that the teams do not work together to make sure that product A talks to product B natively. And so that's a huge frustration for them that not just in the AI space alone with the co-pilots, but then just in cloud in general, kind of more in the foundry space, they couldn't get anything done.
So, okay, so this is incredibly interesting. So when they are asking for the answer, when they agree with you on the problem in the first 15 minutes of the call that they're fragmented, they can't get things done, they're using these chatbots, it doesn't mean anything. But then they've heard a quote from Sham or Karp that says, go beyond chat. What does that mean? What does it actually mean to go beyond chat, and how do you sell that as a vision to them?
So like I said, chat is really focused on how do I query my data? And so I'm just having a natural language thing that's going to essentially write a SQL query. And that's actually what I see a lot of these tools do is I have a data warehouse that you can access through SQL. The chatbot essentially interprets the intent and writes a SQL statement against the data warehouse, returns an answer, and puts it to the field. That's a report. And so when we say move beyond chat, it's how do I actually operationalize things? How do I use AI to automate workflows, to access unstructured data that I couldn't access before? Maybe it's sitting on a SharePoint site, it's in images somewhere. We see a lot of that. And so Gen AI can help us do that natively. So for example, in the procurement use case, that video I did, there's nowhere that I'm chatting with the data. Gen AI is extracting information from RFPs. It's reasoning across them. It's looking for those across invoices and matching those up. That reasoning function is what we're focused on. Gen AI brings reasoning to things that normally had deterministic logic and human. Now the human machine reasoning is what we focus on with LLMs.
And that reasoning can't actually derive value in the context of the large language models unless it's connected to an ontology, correct?
Yeah, the ontology is the digital representation of your business and your business process, how it actually operates. And so the focus there is if I have a digital twin of how my business operates, great. The LM has no knowledge of your business. It has no knowledge of kind of what I call the dark matter, the things that are on whiteboards and spreadsheets and hallway conversations. So the ontology gives you that backbone to be able to capture those things and then do that in human language, human knowledge that was trained for used to train these LLMs. And so basically the idea here is the ontology is the representation of your business. The LLM is the machine reasoning. It can use tools to navigate across the ontology, navigate across the digital twin of your business, and then find answers and ground that in the truth and reference back, where did I get this answer? How did I use these tools to get it? And then also take action. So it's not just the data piece. We say data, logic, and action. So it's cool. Now I found an answer. What do I do about it? What's the optimal 3 responses I should do? And then pick the most optimal one and actually take action. All of that is facilitated through the ontology. Without that, you just have a bunch of data piles that the LM tries to reason across and has no clue how they're structured or what it means or how your business actually operates or the stuff that's in the hallway conversation.
So my next question to that, and I think this is going to be a question that everyone wants an answer to, because I feel like everyone's been trying to figure out the answer, but we don't explicitly know. So I think someone like you could really tell us what the answer is. Why can't Snowflake do what you just said?
So Snowflake, they've got their own LLM as well. They've trained it on business data, but it's not your business data. It doesn't have the logic about how you operate or anything like that. The ontology is something we've built over 20 years of hardened experience to make it scale, perform securely. Like all these things have been, tested, battle tested with Gotham through Foundry and all of the big work we did at BP and at Tyson and all these other places. That system is like very unique. I don't see anyone else in the marketplace. Snowflake is their data models are focused on a data model. A dimensional data warehouse, a star schema. These things are just models that try to represent a little bit more business friendly or user friendly way of the system speak. And so the thing is, everyone's focused on the wrong problem. They're focused on how do I sell my widget? I'm going to create a semantic model that a BI tool can sit on and it's going to tell you an answer of some metric. Like that's what they're focused on. No one is even focused on what we're doing.
Right.
Like, that's the problem I see with all these other players.
Right. No, I think that's so true. And I think that's a very important thing to think about. That's what you said in your tweet, that Palantir can do a lot of these things that some of the Snowflake's Datadogs can do in terms of being a data lakehouse, but taking it a step further and actually operationalizing all that data to make it create value, which is what you keep talking about for the business.
And that's what I put in the tweet, was because yes, you need all the data in one place. That's great. That's the first step. But when you talk to a business executive, like you go talk to a CEO of one of these companies, and they're like, I just went through this cloud transformation. I spent 3 or 4 years, tens of millions of dollars. I have all my data sitting in a data lake now. Like, but my business hasn't changed.
Right.
And like my two reports are now one. They run in the cloud and they cost me 2 or 3 times as much. Like, how is that transformational? That's what they see out of the value of those things, because people stop at putting stuff in a data lake.
And these people are upset at this stuff, right? I'm assuming they're annoyed.
Yeah, they're annoyed. Yeah, I mean, that if you just spend tens of millions of dollars in 2 or 3 years of all these promises about how getting all your data in a data lake is going to solve the world's problems, like that's one step, but that's not the end goal. And that's where a lot of IT practitioners fall short, because the IT practitioners are focused on getting data in one place. That will solve all my reporting problems. Like that's where they're focused. The business is like, yeah, that's not transformational.
Right. Now, when you say in this tweet, I know it sounds like black magic, but our connected tool chain as a single secure model, is that basically what you're talking about, is the ontology at the end of the day?
No. So like I said, I wasn't actually honed in on ontology here, because I only had 30 minutes. I mean, to do this whole bit that I did here, I had maybe 10 minutes. So my focus here was actually the friction between tools. So you go to the cloud and you stand up, whatever cloud tool you want, Redshift, BigQuery, all these things. It's great. Now, okay, I want to create a workflow and an application on top of it. Well, how do you secure that? How do you do that, with security governance across those things? How do I run a simulation on top of those things? Each one of those is a new product on one of these clouds, and none of them work together. And that's where the false dichotomy has been sold. All these cloud providers say, we are going to take away the non-differentiated heavy lifting. That's AWS's kind of tagline.
Right.
The problem is, when I go into their cloud, now I still have to stitch their own tools together to get them to work. And so you're spending all this time stitching tools together. Security models are different between tools. And wait a second, well, how is that any different than what I was doing in my data center? How is that any different than I would do if I bought a bunch of SaaS products? It's not. You can just get one bill, right?
Right. Okay, Chad, 2 more questions for you. This was really, really helpful. I think a lot of people are getting value. In the context of AIP, once you have that ontology, I'm assuming these AI agents, that's where shit goes to a different level in terms of superseding value.
Well, imagine this. So imagine you have a digital twin of your business process. And so we call this kind of like north of the ontology. Once you have the ontology, it's like it unlocks simulations. It unlocks agents. It unlocks workflows. It unlocks the OSDK. All that just becomes native once you have an ontology. So all of those other business practices, hey, you want to go do process mining on how your orders are flowing through? Cool. That's like a widget. That's not another tool you got to go buy. It's not another thing you got to go stand up on a cloud and integrate. It's literally a widget and a workshop app. And, an hour later, you can have a process mining workflow in your application. Like that is the difference versus I'm going to go do an evaluation or RFP to go find a process mining tool. I'm going to plug it in. I'm going to spend months installing it. Or even if it's already existing in the cloud, I got to go spend time integrating it, figure out security, go through my architecture review. Like, it takes weeks, months to go do all that. And in the tool, we can do it in a few minutes. Like, that differentiator is huge.
Right. This is awesome. This is really cool. I see a lot of comments in the chat. People are getting a lot of good info. Last question for you, Chad. How cool is it working at Palantir?
Fucking coolest thing I've ever done.
Because you've been in big tech for a long time, but Palantir, I think, is a little different for you now.
We just operate differently, and the only thing at the end of the day that we care about is winning.
I like my stock-based compensation going to people who say that. Well, actually, one final question. How does it feel for Gary Tan to follow you and you turning into a little tech celebrity? What's going on here?
I'm excited just that we can start to get the message out to everybody. Now, Gary knows better than anyone what we do, but his connections and everybody else, the lack of communication for so many years about kind of what we do and how we operate, was tough for people to understand what is Palantir. When Palantir showed up my doorstep, I had never heard of the company, didn't know what they did.
And that's always been the problem, right? That it's a pseudo black box.
Yeah, it is, and it's really the unwalled garden. It's the place that is very open. We everything has APIs, an SDK, the ontology SDK. It's interoperable in ways that other platforms are not. But we very much get this, black box because it's CIA, it's secretive, it's this and that thing. And in reality, our platform is actually very extensible and open. And so I love that Gary and others start to follow me because they start to kind of help spread and show the message about like what it is we actually do and how we're different. And so finding new people and I've already out of that just alone, I've had people connect and start to talk to me about different work they're doing in ML engineering and all these different things. Like, how can I try out Palantir? Like, all of that is super exciting to see people build with the platform. So that to me is like the most enriching thing, is something that I'm working on and people can go build their company on it and make real transformation based on what we're doing. That's exciting.
It's really exciting. And the thing I think about you that's incredible and that's just impressed me and Arnie when we met you beyond imagination is that you work in like big tech data, you're an engineer, sometimes you're in sales meetings, and then you're also growing this Twitter brand, like doing marketing and getting the message out. So you kind of do everything. And I think it embodies that winner mentality at Palantir. It's super exciting to kind of see it all play out.
The thing I say to when I used to have teams of people and new employees, there's no job that is below you. Not that Twitter's below me, but like there's no job that you should look at that you shouldn't be a part of doing it if it's going to help you win.
I love it. All right, chat's Twitter in the description. Chat, thank you for taking the time. We will talk to you later.
All right, later, man. See
later. Bye. Cool. That was fun. Hopefully that gave a better understanding of Palantir. I think Chad and I will probably do a podcast in the coming months on ontology and go even deeper to some of the stuff he was talking about. But I think some of the core points is that integrated ecosystem that the professionals, C-suites, as he wrote in his tweet, are having a problem connecting because they're so fragmented. Forget the ontology. If Palantir can just solve that problem and then put an ontology on top of that, and then you integrate AIP, I mean, this thing can get really big really quick. And I think a lot of investors on the institutional side are starting to take what Chad said to heart. And they're realizing that if that truly is giving transformational enterprise value, then the multiple on that enterprise value eventually should go higher. And people, the company itself should be able to generate more growth. So exciting stuff in the world of Palantir. Let's take a look at the markets and then I'll get you guys out of here. What we have, Palantir 2765. All right, market's taking a little bit of a dump. That's okay. S&P is down. I think that's actually very healthy. Nvidia's down 4% and IWM is up 4%, 3.5, which is incredible. This is really what we needed to see. Like, we needed to see this rotation. It's finally happening. And maybe it really happens when we get rate cuts. But if this rotation continues to occur, probably going to see big tech take a little break potentially. And some of these companies that have lagged throughout the year start to catch up, which is going to be good because we need a market that broadens out and that sees more momentum. Not bad at all. All right, cool. That's it for me. I'll see you guys back at 3:45 and we'll get deeper into the market close, see where the market goes from here. Tesla did touch 270, but right now Tesla 262. All right, so Tesla's taking a little break. Makes sense. Good CPI report. We kind of front ran it yesterday. And so we'll see how the market interprets it throughout the rest of the day. All right. That's it for me. Thank you, everybody. I will see you guys at 3:45 for the market close. Oh, wait. Word of the day. We didn't even do word of the day. Gotta do word of the day. Word of the day is Elveneses.
11s.
Okay, this is stupid. 11Z. Who the fuck? 11Z?
11s.
A mid-morning break for refreshments? I have never heard of this word in my life. During 11Zs, the hikers rested and refueled. Every day she looks forward to 11Zs. No one on the planet is ever going to fucking say this word. Who says their mid-morning break is 11Zs?
11s.
Dude, I've never heard this word before. It is from 1840. It means an 11 o'clock meal. Okay, well, I guess I'm about to go have an 11-ness because it's 11:09 and we got to get some food. This is incredible. I've never heard this word before, but there you go. Now you can use this this word if you want to get like brunch or something, and people will be confused with what you're trying to say. All right, that's it for me. I'll see you guys at 3:45. Bye, everyone. Have a good one.